Good afternoon, everyone. Welcome to Sunday and welcome to this week. And what a week it's been. We're here once again. Last week, holy banana bread. You guys brought your A game. We had a pretty good week. So we actually broke a record last week on the show. We had the record used to be 55, 55 being the most people in at any one time. Well, we got 56 last week. So now the onus is on you guys. The onus is on you guys to hit 57 today. So I'm going to be paying attention. I'm going to watch. It would be fantastic if we did. Of course, we probably won't, but that's fine. We'll still have a fantastic afternoon. And yeah, it is going to be good. We got some news stories. We got lots of questions. You guys are already hitting up the chat. Holy banana bread. All right. Before we get too deep into things, I have brought up a nice little thing. And actually, before we even get to that, we got a poll going. I started a poll at the beginning of the show just so that we can sort of see and get everyone's feelings on what you're expecting for the coming week on the market. So right now, 50% of you are feeling like we're going to have a green market for the week. 14% red, 21% flat. And of course, we got the 13% who's just saying, "Get this thing out of my way. It's blocking the chat. I don't want to see it." So yeah, we got that as well, and that's cool. I thought that was funny, just putting that in that way. So yeah, let's see what we're gonna get now. I don't get to vote, so I'm actually thinking we are gonna see a green week overall. We'll have a few corrections. We might even have at least maybe one buy the dip opportunity, but I think for the most part, it's gonna look pretty green. So this is gonna be fantastic. So before I hit the chat here in just a second, I just want to point out that little blossom thing up there above the bear and the bull out there shopping for school supplies. Um, Blossom is that social media app that is designed for, well, investors. So it is a place where you can connect with like-minded investors, talk about stocks. You can follow your favorite Canadian YouTubers. Also US. We got US folks in there now as well. So it is a fantastic little place to talk, meet up. Some people love it. I'll say there's a few people in the community that do not love it, and that's perfectly okay. But I say, if you haven't tried it out, go make up your own mind. Check out the link down below in the extra information underneath the chat. You will find a link to Blossom. So, definitely check that out. Okay. Whew, before we even think about the news, we got to take a look here at the chat. As usual, we got Jonathan. He's asking if I'm late. Of course, I'm not late. I'm not late. Usually, the only time I'm late is if I got a technical difficulty. But I do not like being late. That's for sure. CG says, "Will BTC go under $70,000 this year?" Yes, it will. It's currently right now it's under $70,000. Now, if you mean by your question, will it be under 70,000 at the end of the year? None of us really know, but I don't think it will. I think it will be above 70,000. I think it will finish out a lot higher than 70,000, to be honest. I don't know about the 100K. I don't know about that. A lot of people say, "Oh God, it's on its way," and I hear tons of very, very unrealistic predictions. I do think it will be above 70,000 at the end of the year. Maybe it'll be above 80,000, but we'll figure that out as we get a little bit closer. I don't know about 100,000 at the end of the year. Maybe. I think there's a chance. 200,000? No way. 150,000? No way. But there's a possibility of 100,000. Definitely, I think we'll be above 70,000. Prairie says, "Good afternoon, like-minded investors. Happy Sunday." Gotta love a happy Sunday. Gotta love Sunday. Sunday's pretty cool. JJ says, "Make it flat or red for this upcoming week so I can buy some more at cheaper prices." Yeah. That's the thing, right? When the market is struggling, it is a great opportunity to be, well, buying things cheaper than normal and that turns into more profits down the road. And JJ says, I hate green days. I can understand that. But here's the thing. I would rather be DCAing on a nice, big, long slope up to the moon than buying the dip. Because, well, you know, sometimes you got to say, let's get there. Let's start turning that momentum around. Because one of the things you have to think about, and this is something that I don't know how often people think about this, but when you look at where the market is now, and a lot of people will compare it, to last year or to, before the last bull market, and they'll say, well, we're roughly doing the same, so we're slightly getting some all-time highs here. But you got to realize one thing that you're not pricing in. You're not pricing in inflation. There's been a lot of inflation. So if the market right now is the same price it was at 2 years ago, technically it's actually lower because of inflation, because it hasn't adjusted for that. So there's more room, I think, to grow when you start thinking about, okay, yeah, we've had some serious inflation between the last bull market and this bull market, and we definitely need to see that start to get reflected into the prices. So when you're thinking, oh, this is overpriced, it may not be. It may not be if you really look at it through an inflation lens. So just something to keep in mind. Yeah, and a happy Sunday. And Bismarcky's in here with a happy Sunday. We got Al Bundy in the house with a hola. I bet it's red tomorrow for me. There's no way I'm getting 6 green days in a row. Just for you, Al, I'm hoping we get a green day. I'm hoping you get a green day. Marion's in the house with a hello and happy Sunday, everyone. Prairie says, while I anticipate it will be a green week, I think CNR will be down, which is perfectly all right with me, as it just means I can pick up a few more shares at a discount. Yeah, there is definitely a possibility that we could see a little bit of a downward movement in our railroads as people get a little more worried about what's happening with the strike. So we're going to talk. That's actually in our news. I think it's story number 2. So we will definitely talk about that a little bit later in the show. Mary's in the house. Hi, everyone. And you know what this means? Mary is in the house. So I'm going to have a cup of coffee because you guys are all about to be busy hitting that like button. So, what can I say? Oh, that was so good. That was really, really good. Lisa is in the house with a hi, everyone. JJ says, I voted flat. Yeah. I mean, and that's the thing. When you're but keep in mind though, when you're voting, you're thinking, well, what is the market gonna be next week? You may want it to be flat, but that may not be what you think it's gonna be. So you kind of want to go with what you think it's gonna be. Anyway, I'm just saying, I'm just putting that out there. Terry is in the house with a hi, folks. Bismarcky says your vote matters too. Absolutely. Everyone's vote matters. It all counts. It all adds up when we have the final tally. I'll probably end this poll in a little bit. I just kind of wanted to see what the opening vote coming in, the general feeling that people have for it. Jersky says, hello, and Prairie, I think you're right, and I'm hoping for a car to go down and scoop up shares. Oh, there we go. There we go. Stan Gray is in the house with a hello. We got Patricia with a hi. Let's see. Our Discord family is way better than Blossom. Too toxic for me. Stopped using it a long time ago. And that's fair enough. And this is what I always say. It's like, you know what? It doesn't matter what app is what. Now, here's the thing. The big difference between our Discord server and Blossom is that, well, the Discord server is just us. It's, it's a smaller group of people. It's, you have a better chance. Whereas, you're looking at Blossom, there's thousands and thousands of people over there. So, yeah, I mean, yeah, I like our Discord server a lot. There's definitely some great conversation over there. And I always say, if you're new to the channel and you haven't checked out our Discord server, that's a great place to go. I probably give me a second here, guys. I'll grab a link for that. Now that we brought it up, bang, it'll be 1 second here. All right, need to invite. I'm going to make sure that it is a forever link. All right, 7 days, no limit. Oh, no expire. Never expire. All right, I'll have a link here and 2 shakes of a lamb's tail. All right, now we'll drop it in here for you guys. There we go. So there is a link to the Discord. It is a fantastic place to talk, communicate, ask questions. There's always somebody on who will, pipe in and, throw their wisdom your way. I like it over there. I also keep the schedule over there. I keep the pool. So the pool is where I pull the companies or the ETFs out for voting. Speaking of voting, there's 2 votes going on right now on the site. The first one is for our next deep dive, which is an ETF deep dive. So that is on the community tab. The second poll is for the community members, for channel members. So for channel members, we have coming up on Thursday the exclusive channel member live stream. So that means that there's a vote up for what the main topic is going to be, and that vote is ongoing right now. So that's also on the community tab, only viewable, of course, to the channel members. So definitely get over there, click on vote for both, and that will be kind of fun. All right, Abalash says, hi, Candace. Hi, Abalash, how are you? Burgers, as I heard, stocks always go up. It's kind of true. It's kind of true. Now, let's just say stocks in general always go up. Every so often, there is a stinker that goes down big time. So something to keep in mind. Abalash says, Bell and Telus got hammered last week with the CRTC ruling. Do you think they have more downside with this ruling to share fiber network? Here's the thing. So because they're sharing their fiber network, they're still making money off of these third-party companies that will be using their network. So they're still making money. They're not making as much money. And that's kind of the whole thing with a lot of the big, Bell, Telus, and Rogers. They tend to put up a stink anytime the CRTC makes them provide something that could create an alternative for customers to have a cheaper option, because that does take a little bit of profit from them, but they'll be fine. They'll be fine. If we get any kind of and this is the thing, even if it's going to affect their share price in any way, shape, or form, we're not going to see it for a while. Not until Q3, or maybe even, probably Q3 or maybe even Q4. So it's not something we're going to see right away. All right. CPI doesn't include tax. I don't think it does. I think it's just a straight up price. So yeah, that's one thing that we're not seeing. When you're looking at the CPI, for example, you're not seeing, for example, you're indirectly seeing some taxes. So for example, the carbon tax, you will indirectly see that within the CPI, but you're not seeing, you're not seeing regular tax. Let's see. Patricia says, I don't mind a little bit of red, and I voted flat. All right. Flat. Right now, looking at the poll, by the way, we're still at green leading 45%, red at 18, flat at 23. So flat's making a resurgence here. And just get it out of my way, 14%. So not too shabby. We actually had 22 votes. 22 votes. I'm okay with that. Right now there's 27 people in chat. So that means at least 5 people didn't vote, but that's fine. That's fine. I suppose it does minimize, and so you can still see the chat. That's kind of why I was saying get this thing out of my way type thing. All right, Burgers says, with how much energy needs will increase and the price of producing ships going from 80 million to 400 million, I'm very confident in a return to high inflation in 2027. So that's going to be an interesting thing. That will be definitely an interesting thing for sure. Inflation is always going to be kind of a struggle one way or another. And, keep in mind, once we have, right now with what's going on with the Bank of Canada and the Fed down in the United States, once they have inflation down, there's always going to be movement. Inflation will move up for different reasons, and they will still have their tools. So that means, like, once we get our rates down, doesn't mean they're going to be down forever. They will move up and down as required by the economy, but we shouldn't have. I don't want to say won't. We shouldn't have some of the aggressive rate hikes that we've had in the past, not without a serious catalyst for that. And those were kind of, in a way, those were kind of historic if you think about it, because I've never personally seen hikes that aggressive that fast before. But they meant business. They did mean business. So we'll have to see as we move along. And I kind of got that you were saying CNR with that. Actually, in the back of my head, I was like, is he mentioning a train car? But that's cool. That's cool. All right. Prairie says, a green week with inflation ends in a flat week. Well, there we go. There we go. So using inflation to flatten it so that way that makes you right. That makes you right. I'm okay with that. Burger says, shipping an oil tanker costs 70 to 100K per day. That's huge. And that's on schedule, and 140 to 180K spot price per day. How much will when they cost with the higher interest rate and increased cost? Yeah, that absolutely. That's the whole thing. Like a lot of shipping of things. And keep in mind, there's a few other things too that one of the things that, at least from the Canadian side, is with the trans pipeline, that that is one of these good things for Canada. And another thing is if we actually start building our own processing plants, so that we don't have to ship out our oil and have it processed and then brought back, and then buy it back, which is kind of ridiculous. So I think pipelines are huge when it comes to a lot of this movement. And that's the kind of thing that we have to start to look at. Like, I mean, North America as a whole, we have a lot of resources here. So anytime that we're shipping resources off of the continent to get processed in some other place and bringing them back in the processed form, that's something we really shouldn't be doing. And when we start looking at things like what Burger is pointing out, just with some of the cost of some of these shipping costs, yeah, we definitely want to avoid those to the best of our ability. And I think as these costs get higher and more prohibitive, we're going to see a lot of politicians taking a serious look at what we should be doing on our own soil. And that's one of the nice things. One of the things I do like about the Conservative Party right now is that, they're sort of looking at that. And I think that's a good thing. And I think it doesn't even matter who gets in. I don't care. But they need to be looking at how we can better things for Canada, how we can utilize our own resources, and utilize the resources that the U.S. needs. They are our biggest trading partner. So let's keep that going. All right, Bleak is in the house with a hey. Gotta love that. JJ says, I'll be back later. Gonna go eat some all-you-can-eat Korean barbecue. Nice. Well, have some fun. All right. Oman Alun has 200 tankers on order, publicly traded company, but I don't know how to buy it. South Korea is building the ship, so I'm in there. Yeah, no, that makes sense. I mean, it makes it. And this kind of stresses the importance of following news around the world, knowing where there's going to be a demand for stuff, and that can really sometimes point you into some really good investment opportunities. All right, I finally caught up. Before we get into the news, I'm going to end the poll now. So green does win it after 23 votes. So 48% green, 17% red, 22% flat, and 13% just get the poll out of the way. All right. The poll is done. There we go. You got to love it. And I know a few of you said you like polls like that, so we'll try to do some more from time to time as well. So that is always fun. All right. we do got news stories. We do got news stories. Our first story is, well, yeah, we had three big reports coming out in the US this week. So we had, first of all, on Tuesday, we had the Producers Price Index. So that's the PPI. So here's the interesting thing. So they had actually forecasted to come in at 0.2%. It did come in better. It came in at 0.1%, which is fantastic because this is more of your wholesale sales. So we're seeing a little bit of inflation coming down. Now, core, I will point out, core PPI was forecast at 0.2, but that did come in a little hotter at 0.3. In addition to that, we also had CPI on Wednesday. So I'm still, before we get into the CPI, I'm okay with that PPI. We did see some movement down, and yes, we saw a little bit of movement up on the core, but it wasn't a serious concern. It wasn't really a serious concern. Switching to the CPI, though. The CPI, we were forecasting it to come in. Year over year was forecast to come in at 2.9, and that came in at 3. So it did come in a little bit higher there. The expected month over month, we were forecasting at 0.2. That came in at 0.2. So everything was as expected. Core came in at 0.2 as well, and that was also the same as the forecast. Core year over year came in at 3.2, and it was forecast at 3.2. So there we go. And just going back to the year over year, it came in at 2.9. It was forecast at 3. For some reason, I had those switched on my my little cheat sheet. So I was looking at that. I'm like, wait a minute. No, it came in better. So yeah, these were good numbers. So between the PPI and the CPI, that put everybody in that mood for, yep, we're going to get that rate cut in September. And not only that, it had people starting to talk about, is it going to be at 25 basis points or is it maybe going to be 50 basis points? Maybe they're going to go a little bit higher. But there's always a villain in every story. And that villain was the retail sales report. So the sales report dropped, and they were expecting sales. They were expecting sales to basically go up by 0.3%. And they went up by a full 1%. So sales came in strong, showing that people are starting to spend. That, the economy is still running pretty strong. Now, that number goes against a rate cut for September. I still think we're going to see a rate cut, but I think if there was any chance of them going bigger than a 25 basis points, the retail sales probably kiboshed that. So I'm thinking September, we'll see, we'll see a 25 basis points down in the US of A. So that will be good. And that's also really interesting, is that where this sort of leans back to Canada is, we're eyeing our next rate cut, and we're eyeing it for September. I really didn't think that was going to be a possibility. Not with the way inflation was in the US, but now that it does appear that we're starting to tame inflation in the US, that really does make September a possibility. So I know I initially said no. I said no to a September rate cut, but I'll tell you, I'm going to flip-flop on that one. I'm going to say, yeah, we're probably going to see it. We're probably going to see it because, if the US is going to do it, then we don't even have to worry so much about how much further apart we are in rates to them. We can certainly afford it at that point. So I think we will see one as well. The fun. Let's see. Al says it's definitely red tomorrow, but I think the greens will be balancing the week to be flat. Okay, fair enough. Terry says, yes, go little green. Go a little green. There we go. All right. Let's get our next news story out of the way because we've already talked a little bit about it. A little thing before we actually talk about this story. You will notice this is the same picture I used last week. So I've got a whole bunch. Like, I've been making these now for a while. So I'm going to reuse some from time to time. If basically I've already made the perfect picture for the story, why make it again? So in this case here, yeah, we're recycling. We're recycling. All right. So right now, and we've already kind of talked a little bit about this, but both CNR and CPKC, they've begun halting shipments of certain goods because we got a strike that's looming. So these shipments that they're halting right now are hazardous materials. So things like chlorine and ammonia, as well as anything that's toxic or explosive, because they don't want these things to get sort of stranded in the middle of nowhere or in the middle of a town. Could you imagine if they got stranded in the middle of a town? Oh boy, that wouldn't be good. So they are starting to pull these things out. Now, there are some concerns. There are definitely some concerns about these things. So, for example, a lot of that chlorine that's being parked is needed by a lot of cities. So that is actually a lot of it's used, for example, drinking water. They put a lot of that chlorine in there. A lot of the ammonia is also used by our farmers for fertilizer. So these could have an impact. Of course, a big full-on strike is going to have a big impact as well. So basically, so the two railways, both railways, they have warned last week that they will lock out 9,300 engineers, conductors, and yard workers on August 22nd unless they find common ground on new contracts after negotiations have stalled. And so basically, mostly it's all over scheduling and wages. So, it's a lot of times these strikes are. So initially, and I told you guys last week, they were waiting on a report to come back. They did receive that report back from the National Labor Board. And they actually ruled that a work stoppage would pose no serious danger to public health or safety. So that has opened the door for a full strike, like everything completely shut down when it comes to rail. Now, they did put in a 13-day cooling off period. The end of that 13 days happens to be, well, you can probably guess, August 22nd, when the lockout is planned. Or, I suppose the union could say, we're going to strike. And they'll be like, no, you're not. We're locking you out. But we'll have to see how this goes. I have a feeling that this is not going to be a long strike. I mean, we're kind of at this position where this is like a major blow to the supply chain. You take a lot of the stuff that comes into, well, we'll look at the West Coast. A lot of the stuff coming into the port of Vancouver, it gets shipped by rail to the rest of the country. So that's all gone. So they're going to have to make alternate arrangements. They can ship by truck, but here's the thing. The amount of money it costs to ship items by truck is significantly more than rail. Rail is the cheapest alternative, hands down. And we're not talking by a little. We're talking by a lot. I don't have the exact figures on me, but I've looked at them once before, and it blew me away how much cheaper it is to ship by rail. Which is funny because I know it's not very cheap to take the train, but it is very cheap to ship things. So when it comes to, and this is based on basically on cubic size, and that's fine. That's fine. It's kind of an interesting thing. So this is going to be a big impact to our supply chain. And right now, the country doesn't want this. The government does not want this, because what happens if there's a supply chain issue? It creates a form of inflation. It's transitory, but it's still inflation. So it could start pushing some numbers back up. And that could be very interesting to see how the Bank of Canada would react at that point. It could certainly stall the rate hikes, but at the same time, hopefully they'll take into consideration that any inflation created from this supply chain disruption is actually transitory this time for real. But nonetheless, I have a feeling that the government will step in pretty fast. And I think that the unions, and as well, I mean, the railways, I think they all know this. So I think that does put an onus on getting negotiations moving quickly. So I'm hoping before we get to the 22nd, and we don't have a lot of time. That's like what? It's like 4 days. I'm hoping they can make some progress. Enough progress that we can stall this from happening. Because trust me, You don't want to shut down rail. Even right now, there will be some, there will be some issues because of some of the ammonia and the chlorine that's already stopped. So let's hope they can get a resolution pretty quick on this. And yes, of course, those of you who are thinking, I don't care about the supply chain, I just want some cheap CNR stock. You may get an opportunity, but it's hard to say how much this disruption will actually impact their stock price. It will definitely impact it a bit. And you might get some good entry points, but we'll have to see. We'll have to see how this is all going to roll out. And probably by the show next week, we'll have we'll have another update on the rail strike. I have no doubt on that. It might even be the top story. It might very well be. All right. Burgers says, sorry, Nakalat is in Qatar. Okay, fair enough. Prairie says, same story subject, same image. Nothing wrong with that in my books. Yeah, like I'll make new images when I get something unusual or if I get some kind of a funny idea, but I'm going to recycle a few. I'll recycle a few. And then every so often, like, an image will bore me and I'll change it anyway. Just a little thing. Yeah, all right. Whoops. There we go. And this is another recycled image. I have used this image before. So grounded. Oh boy. Did somebody do something bad? No, we're actually talking about the airlines. So Canada Jetlines, they first took to the skies 2 years ago, but they're now grounded thanks to a cash crisis that has basically forced them to cease operations. They are the third Canadian carrier to quit operations in just the last year. The other two were Lynx and Swoop. So Lynx and Swoop are gone as well. So according to them, and this kind of bugs me a little bit, but according to them, any customer with flights that were already booked, they basically need to just call their credit card companies and see if the credit card companies can put a stop on the payment or something to that nature. I was just kind of like, oh boy, that's that's like terrible customer service. I'll never fly with them again. Well, of course not, but still, oh boy. Now trading on their shares, those were halted on Wednesday. So they were on the Neo exchange, just to put that out there. So now they were almost the last of our budget airlines. We still have one left, Flair. So Flair is still out there, and our major players that are still left, we still, of course, have Air Canada, WestJet, Porter Airlines, Air Transat, and Sunwing. But Sunwing is actually owned by WestJet. So we're getting down there. We're getting down there for sure. So in almost related Canadian big airlines news, a lot of the big airlines are actually looking to cut a lot of their flights to smaller markets and basically shifting those planes towards the more lucrative routes, I guess, or the ones that are busiest. So according to the Canadian press, flight volumes between major hubs, so like Toronto and Vancouver, they've been rising steadily since 2019, while the smaller markets like Regina and Sault Ste. Marie, they've fallen about 40%, all the way up, in some cases 100%. So it's getting more difficult if you want to fly out of some of the smaller locations. In addition to that, they have been also throwing up the price. Like if you want to fly out of Sault Ste. Marie, you're going to be paying a lot more. In some places, they've actually increased fares all the way up to about 173%. So that is not good for it's not good for small communities, certainly. So I don't know. It's kind of getting to the point that airfare or airplanes in Canada are just going to be between the big cities. So yeah, it's changing. It's changing up on us. That's for sure. All right. Now, since you guys are giving me an opportunity to get through the news, I kind of like that. We got a brand new political party in Canada. So the other day I was just saying that we do not have enough political parties in Canada. Actually, that's something that's been said by no one, ever, as far as I know of. But we have this new party. It's called the Canada Future Party. They officially launched this week, I believe, on Wednesday. And they're billing themselves as the centralist option for Canadians, as they're saying the Liberals are leaning too left nowadays, and the Conservatives are leaning too right. So they're trying to fill that void in the middle for people who want very central leanings, I guess, or party, anything of that nature. Now, they are going to put themselves to the test right away. They are going to run candidates in the next couple of by-elections in September. So there's one in Quebec, I believe somewhere's one of the ridings, I believe, in Montreal. And there's also one in Manitoba. So those are both going to be, they're going to run in them. I don't know what we would consider a success. I would say if they can manage to get 5% of the vote in either one of those ridings, I would be impressed. They obviously they have no chance of winning. I don't think they have any chance of forming the government anytime soon, but stranger things have happened. And I think I mentioned on the market close, I mentioned about the Reform Party. Now, the Reform Party at one point, they were that new party to give people a sort of a, it's actually interesting. They were kind of a more right than the Conservative Party at that time. And then that eventually they grew in popularity. Well, they had a good footing in the West. And they started splitting votes from the Conservatives to the point that eventually the two of them merged and formed a new Conservative Party. So you never know, but I don't see that grassroots type of support for this new Canada Future Party. I do like the idea that they're central, but I just don't. I think they have a long way to go, like a very, very long way to go. All right, let's get to our next story. Oh boy, we're really flying through these today. So this is a leak. This story is an Apple leak, so you got to take it with a grain of salt. But they're looking to develop and market a tabletop home device that comes with an iPad-like display and a robot arm. So this robot arm will apparently hold your iPad, and it will adjust it and move it with you, so that way there it'll always be facing you or something to that nature. I heard the idea and I'm like, why? Why, Apple? Why? Why would we need this? I don't, unless it does other things like, I don't know, will it scratch my back maybe if I need it? I just don't know. So that's kind of an interesting thing. Now they're hoping to have this thing in the market by 2026 or 2027 at the latest. I'm hoping there's a lot more to it than what the leaks have suggested. I'm actually hoping the leaks are absolutely wrong on this one, because I don't think we need it. But we'll have to see. I mean, another reason I don't think we're going to need it is, we are heading towards the point that we'll be able to have robots in our house, and I'm sure you could just tell the robot, here, hold my iPad, and follow me with it. Unless of course this table is going to have feet that move too. I just don't know. It seems to me that it's just not. I don't see it as working. Now the whole device itself, like they said, they've envisioned it as a smart home command center, video conferencing machine, and remote controlled home security tool. Fine. I mean, but you can still do all of that through your iPad. Why do you need a robot arm coming out of a table? I need more. I need to see more on this. It's got me a little bit confused. So, but it was odd enough. It was odd enough that I thought we had to touch on it, because I'm like, oh boy, that is definitely odd. And this is exactly right. Larry is saying, sounds like Apple is out of ideas and needs to return a higher dividend to shareholders. Maybe. I'm still pro Apple. And like I said too, because it's a leak, because you guys know Apple keeps top secret on everything. sometimes it wouldn't even surprise me if there was some nerd sitting behind a desk at Apple saying, "Let's leak something that we're not really doing. How about a table with a robot arm?" And someone's like, "Yeah, yeah, they'll buy that." Maybe it's hard to say, but I'll let you guys know if I hear more about this. I'm just thinking it's a little bit crazy for sure. All right, and we got another story. This one's a little woody. So the U.S. has nearly doubled its tax on Canadian software lumber imports, and that's not making a lot of Canadians happy, especially in that industry, as well as our politicians. So the U.S. is claiming that lumber harvested from government-owned lands is unfairly priced, and the reason they're saying it's unfairly priced is something called stumpage fees. So stumpage fees, those are basically the fee for harvesting lumber from government land. The U.S. has stumpage fees as well. If you're in the U.S., so it's a normal thing. But apparently, in our case, some of these fees have been priced to well to give us a bit of an unfair advantage when it comes to competing with other international providers of lumber. So the U.S. is kind of saying we're getting an unfair advantage, and they're trying to increase the taxes on these imports so that we don't get that advantage. So it's kind of interesting. So basically, when these fees are below market rates, it has the effects of lowering the cost of materials for loggers. And this is a result. This is what causes the unfair advantage, because if you lower their costs, they can sell for cheaper and still make the same profits. So that's kind of what's been going on. Now, it says the U.S. went on to say that Canada ends up with a de facto subsidization due to the nature of land ownership, while in the U.S. they do set their stumpage fees through competitive bidding on public land. So Canadian provinces, they set their fees based on a formula, which is basically what leads to some of the lower prices. So because we're doing it differently, that's kind of what part of the issue that the U.S. has with this. Now, this dispute itself, we don't really anticipate it actually getting solved until 2016, when Canada sits down with the United States and Mexico, and they review the current North American Free Trade Agreement. So it probably won't get fixed until we get to that. So we may have to live with some of the higher taxes for now. So what can I say? Mohammed says, "Hi, Candace. One robot working 24/7 can replace 4 workers. That's why I'm very bullish on Tesla." What's your thoughts on that? Only 4? I mean, think about it. You got one robot working 24/7. So you might be thinking, well, okay, yeah, that's about the same amount of shifts as 4 people. Right. But that robot's also not going to need breaks. It's not going to need lunch. It's going to do things incredibly efficient. Like it won't stop because it's got a tinge in its back, or it needs to scratch its ankle. I would say that number would be higher. I bet you one robot working 24/7 can probably replace maybe 6 workers. So I would say even more. Yeah, I'm bullish long term on Tesla. I think they will do well. Despite what Elon Musk does, he's a different sort of person. But Tesla has, one thing Elon has been good at is really pulling together a lot of good talent, and that's what Tesla does have. So Tesla is that company that even when you count them down, they always come back. So yeah, I would say that it doesn't hurt to be bullish on Tesla long term for sure. Right. Terry is mentioning, and that is Dominic Carty. So he is the leader of the new Canadian Future Party. So he was the New Brunswick provincial leader of the NDP. The new national political party sounds as relevant as Doug Henning's Natural Law Party. Yeah, yeah. Now, even though now they are going to have a leadership convention in November for the Canadian Future Party, and then they will actually get themselves a real leader. But Yeah, yeah. I remember the Natural Law Party. Oh, yeah, that I don't think that survived, or it might still be out there. I just don't know. We really just don't need it. We don't need it. Um, let's see. No bathrooms, texting, gossiping, talking. Exactly. Yeah, Elon mucks. Elon mucks stuff up again. That's what we'll call it. How many popular parties, politics do you guys have? Well, okay, so we got the three main ones. So you have the Conservative Party. They technically lean right. We've got the Liberal Party, who's supposed to be centralist, but they're not. They've moved a lot more left. And then you have our further left our party, the New Democrat Party, so the NDP. Now, Quebec has their own party, the Bloc Québécois, and they sort of, they take a whole bunch of seats every year, and they make it a little more interesting, I guess, in that sense. There's also the Green Party. That's a small party. I think it started in BC. Sort of like they kind of lean green, but with an environmental agenda. I know then there's a whole bunch of little ones. So probably the next biggest would be there's another PC party, a progressive conservative that's a little bit different than the main Conservative Party. They're basically remnants of the old Conservative Party that didn't merge in the merger between the Conservatives and the Reform Party. So they kind of sit out there. Then after that, there's like oodles of these little parties. So there's like there's like a communist party. I think there's a marijuana party, a rhinoceros party, and I don't know about that whole natural law party. It might still be there, but there's a lot. There's a lot. Anybody who knows any really funny sounding ones, throw them in the chat because there's a lot. There's a lot for sure. Bismarck, he says the Liberals need a new leader. They do. They absolutely do. Justin Trudeau has, he's expired. He's like currently sitting in the bargain bin because they got to get him out. Got to get him out before the mold starts growing on him. But here's the thing: he does not want to go. He is pretty darn stubborn. And after the last by-election loss, they lost a stronghold. They lost a Liberal stronghold to the Conservatives. Nobody thought they would do it, but the Conservatives actually did it. So yeah, they lost a stronghold, and now we got two more coming up. And if the Liberals lose both of these seats as well, there will be a lot of pressure within that party. There'll be a lot of people telling him, "Come on, Trudeau, it's time to go." So we'll have to see how that turns out. So September, we'll be watching. We'll definitely be watching these by-elections to see what happens. Not for the Canada Future Party, but just to see if the Liberals, lose both of these seats as well, and how badly they lose them. Now, the interesting one is we'll have to sort of see with the one in Quebec. Now, it is in Montreal, so I was going to say the Bloc Québécois, they're not as strong as Montreal as they are in the rest of the province. So there's a chance the Conservatives could take that one, but I think it'll be a race between the Conservatives and the Bloc Québécois on that one. Out west, that one will be a Conservative seat. I think there's nothing we can even. It's already a done deal, pretty much. All right, let's see. One robot can't replace you. No, but if I had a robot army, what would I do with them? I don't know. Ian says, just got here. Did I miss anything? I will watch the first part later. Yeah. We were talking, and strange things sometimes happen in the stream. And as we were talking, some weird stuff happened. It was like out of nowhere, things like goats started appearing on the screen, and nobody knew why. It just happened. It was a weird thing. I don't know. So hopefully it doesn't happen again. Terry says, I think the popularity for the Natural Law Party could bounce. I don't know. Well, they're following natural laws, so maybe. Let's see. Bismarcky, are you the one who logged in during Candace's all-day live stream from Saskatchewan? I think there were a few. There was Ian. Ian was here from Saskatchewan. Um, I think. I'm not sure. I'm not sure. Bismarcky says, "Oh, that was me." Okay, there we go. Let's see. Bloc Québécois is not the top party in Quebec. It depends. Most times they do win a lot of seats in Quebec. I think they win more seats than anybody else. There was that one year that there was kind of a protest, sort of a protest vote against the Bloc in Quebec, where the NDP ended up winning all of these crazy seats. And the funny thing is, this was back in the day, back when Jack Layton was around. Um, they, the NDP was just finding people to run in Quebec that year. They had no clue this was going to happen. So, and the people who were running in Quebec, some of them were just people who they just threw names. They're pretty much just name holders, and some of them weren't even around when the election happened. I heard this one story of one girl who won her seat was I think she was in Vegas at the time, and somebody was like, they called her up and said, "Do you know you just won a seat?" And she was like, "What? What?" So yeah, it was interesting. It was interesting. So it's kind of but other than that, yeah, the Bloc Québécois, they do tend to take a lot of Quebec seats. And I think that's, as far as I know, I don't think they have any seats. They run any candidates outside of Quebec. Although, if you know Ottawa, there's a lot of French people here. You could probably run a Bloc candidate here, but I think they're pretty much localized to Quebec. Let's see here. I just remember he had a purple icon, but I forgot his name. And Ian is like, "Yes, I'm from Saskatchewan." There we go. Okay, cool. I forgot who it was I was trying to remember. Jonathan says, "I'm going to have goat nightmares." Hilarious, hilarious. By the way, it's just, so what happened there with the goat thing is I'm looking to do something so when people do like little donations on the channel, I'm trying to come up with a graphic or a little 5-second video to sort of as kind of a thank you or a call out to them. And GOAT means that they're the greatest of all time. That's the way I was kind of thinking of it. So I made that one quick little 5-second video. I uploaded it just because I thought, okay, well, but I don't think that's going to be the final one, but I'll play with it. I'll play with it a bit. It's just something I've been kind of mulling about, because if you ever go to like Twitch, for example, whenever there's a donation at Twitch, people usually always have some kind of custom little thing that they play. So I thought that might be kind of fun to do. So I just happened to have that there, and Jonathan, yeah, just the way the questioning popped up, I was like, this is perfect. Perfect setup for me to do that. So I went with it. I went with it. And I also thought it would be funny because it was completely out of the blue. So I do things like that. All right. Now, do I have another story? I think I do, actually. Yes, I do. All right. So there's been news that good old Bell Canada has been conning cons. And there's a lawsuit about it. So in a new lawsuit, we're learning that Bell has received $64 million from Ontario jail calls. So apparently they're ripping off the cons with some very high rates. Although my first thought was, aren't phone bills usually really high in Canada anyway? But this is what's been happening. So apparently Bell has been working, they're not even doing this alone. The government is helping them as well. So they've been doing this, and they've provided the government 39 million of that 64 as a commission. So what they've been doing is they've been charging $1 per minute plus a $2.50 connection fee for long distance calls through the offender telephone management system. Now luckily this system is gone now, but this was operating between 2013 and 2021. So what the system did is it allowed allowed the inmates to call out collect. So, and that's where the lawsuits, it's actually not coming directly from the from the inmates. The lawsuit's coming from their family and friends who some of them have insanely large phone bills as a result of this system. So it's definitely It's definitely interesting. What can I say? I mean, I I'm not sympathetic towards inmates and people who are in jail for legitimate reasons, but I still don't think that this is a group of people that you want to be taking advantage of at the same time. Especially if you're trying to rehabilitate people. Um, they having contact with the outside world, that still gives them a footstep, or at least, a way to get back into society. So I definitely think that you know, especially today, charging $1 a minute for a long distance call, especially within Canada, that's crazy. It's crazy. I think there needs to be a better system. And I'm hoping that since this thing died in 2021, I'm hoping this is not still happening. So, yeah. Oh, Bell, 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 Bell. All of our big, it could have easily, I could have easily, this could have easily been TELUS. It could have easily been Rogers. I'm just putting that out there. And it could be in other provinces. I don't know. So, yeah, kind of one of those things. All right. The last thing we got for the news is just the things going on next week. So, Canada, we got a lot of stuff happening. On Tuesday, we got our CPI dropping. Wednesday, right after that, the PPI. And on Friday, we got our retail sales. So pretty much we're doing this week what the US did last week. And that's all leading up to the Bank of Canada. Their interest rate decision is going to be on September 4th. So pretty much as soon as you get back from Labor Day, it's time for that big decision. So that's going to be interesting. In the US, I'm just taking, yeah, look here. Okay, yeah, I was trying to think here. Wait a minute. Do we have time for Labor Day with that date? But yeah, we do. We do. In the US, not a lot going on. Not a lot going on. Earnings wise, this week we got TD, the first bank. TD always usually drops just before the big bank week next week when we get all of our earnings for the banks. So that's all coming up. That's fantastic. I can't wait. And of course, on the US side, not a lot really significant companies this week, but everybody is still focused on NVIDIA on August 28th. And the beautiful thing is, and we looked at this on the market close. That's a Wednesday, so we'll be on the air when that drops. So that's gonna be fantastic as we watch this, and we will see what NVIDIA can do. I am looking forward to it. I think it's going to be absolutely fantastic. So nothing wrong with that. Crypto wise, Bitcoin they haven't had a bad week. So we are getting back around to the 60K mark, and there's a lot of hype. Oh my gosh. I have not seen so much hype on the YouTubes about Bitcoin, and everybody's thinking there's going to be a potential big explosion coming very soon. So that'll be something to watch. That'll definitely be something to watch. Right now, it's sitting at $59,804 US. So we'll have to see. Normally, after a halving, most of the big stuff happens about 5 months after. So we're getting into that. We're getting into that point where if something's going to happen, it's going to happen soon. So that's going to be very, very interesting. All right. That's the news. The news is done. I can now actually go to regular full screen, and I'm going to very quickly, while we're doing that, I'm just going to very quickly bring up. There we go. Just going to bring up the other screen here, so that way we can pull it up as we need it. Bang! It is there. All right. Now we are. The rest of the show is yours. This is time for your questions, comments, all of that fun stuff. We'll look at stuff you want to, all of everything. We'll go with the flow. All right, let's get caught back up here. Criminals meet bigger criminals. Yeah, exactly. Exactly. It's just this thing. It's this thing. Yeah, I don't know. I always think that, there's no need to be conning anyone. You could just sell them regular cell phone plans, and that's a con enough, and nobody would be complaining then. There's no need to create your own special little con all around it. But oh well. What can we do? Terry says National Law Party subscribe to yogic. Yeah, that's right. Which in truth look like cross-legged people bouncing. So my suggestion that NLPC could bounce was tongue-in-cheek. Oh my God, yes. The yogic fly. I forgot about that. Yeah, they did these the cross-legged and they did this kind of bouncing thing like I don't know, like they were like stunted kangaroos or something. Um yeah, it was weird stuff. It was weird stuff. Let's see. They should have figured it out after one or two phone bills. It's their own fault. You would think so. You would think so. And it could even be that a lot of them were just like, well, what can you do? It's the system. Until one person started like a lawsuit, probably a class action, and then started talking to other people. And they're like, oh yeah, I had a $500 bill. I had $1,000 bill. And they're like, oh, come on board. We're gonna sue them. So maybe. Let's see. Al says, I grew up in a society that had long distance phone bills. Yeah. I know when I was a kid, like we had that one thing. So anytime we're going someplace long distance, we'd always call when we get there and ask, for, with a collect call. And usually we would be a collect call for made it okay. Everything's great. And the operator, they never seemed to catch on or they didn't care. They're like, do you accept a call from, we're okay, everything is great? And then you just say no. And then, you got the information for free that way. So, but yeah, I'm glad now that we can do this. Like, that you can talk pretty much to anywhere in the world and not have to pay an arm and a leg for it. So I like that. I like that a lot. And I mean, just being able to do what we're doing here today, me being able to talk to you guys, no matter where you are on the planet. So, right now, I think most of you are in Canada, and then there's a handful from the United States. I know we occasionally get a few people in from Europe as well. So, to me, that's fantastic. All right, let me ask, is anybody in chat? Even if you're just lurking, come out of lurking for 1 second and let me know if you are outside of North America, because I'm kind of curious. I'm kind of curious here. So hopefully we got someone. Well, if we don't, we don't. But it would be very cool if we did. All right. That will be a great Wednesday live stream. Oh yeah, I am looking forward to that one. That one I'm gonna have. I'm gonna have extra coffee. I mean, it's gonna be good. All right. Abalash says, what do you think about BNS buying shares of KeyBank stocks? One of the big goals for Scotiabank is they've been wanting to expand into more into the American market. So right now, they've got lots of presence here, and they also have a pretty good exposure into the Latin America market. But the money is not in the Latin America market. The money is in the U.S. market. This is a good way for them to get in. I think it's a good move overall for the company. So I'm thinking it's a good move. I am definitely thinking it is a good move. Now, I have not seen KeyBank's fundamentals, so hopefully they're okay. Because if they bought somebody who was not doing well, that would be a different story. But I don't anticipate that BNS would do that. I think they're smarter than that. All right, and Mary wants to know. She doesn't want to know if you hit the like button. Hopefully you did. But she wants to know if anybody is buying NVIDIA. So, are any of you, we got the hype coming on. We got a lot of people thinking that we're going to have NVIDIA really start to pile up. And, hey, let me show you something. We were drawing this the other day, and it's still here. So this here is NVIDIA, and we sort of based this as the buildup, and then this is the potential what happens afterwards. So we were kind of guessing that maybe they'll get up to 150. That's a possibility. And we based kind of this on what they have done with some of their previous, like here's their last earnings. You can see here's the buildup to the earnings. There's the after earnings. Now, keep in mind, their earnings have to be stellar. Everybody's expecting their earnings to be really good. So, we're going to have to see what happens. I'm going to leave this here on the NVIDIA chart. and we'll just watch and see how close it comes to this little shape here. Maybe it'll absolutely blow away what my conservative guess. Or maybe I'm like out to lunch. Maybe what I think is a conservative approach maybe is perhaps a little high dreaming. So we'll find out. We'll definitely find out. But I'm going to leave this here because you know, that way there we can call me out, make fun of me, or if holy banana bread, if it were actually followed this precisely, I'd be like, what a fluke. That's what I would be like. It's not going to follow this exactly, but this is just kind of a guide mark for where I think we're gonna see. So yeah. So it's kind of interesting. Now Ron says right here, Ron says that NVIDIA is priced too high for me. So yeah, absolutely. And there's nothing wrong with that. You know what? Here's the thing. Now, mind you, there are other ways to play NVIDIA. So, for example, there is the CDR for NVIDIA. That is cheaper. I don't know. I actually don't have an idea how much that one is at the moment, but let's find out. I think it's like something makes me think it's like around $40 or something. NVDA. All right. It's not what I'm. Oh, that's right. This thing doesn't have all of these CDRs on it. Holy banana bread. That annoys me. Let's go to Yahoo Finance. NVDA. Oops. All right, let's pull this up here. NVDA.NE. Here we are. There we go. Because it's on the Neo. Oh, it's even less. So look at this, $29.27. So that is another option to get in. Now this here, basically for those of you who don't know how CDRs work, CIBC, they run them. So they're basically a certificate of depository receipt. So they'll buy a bunch of NVIDIA and then they will then sell shares in that NVIDIA that they're holding. So these things are directly correlated. The only difference is of course, there's going to be small fees behind the scenes where CIBC gets paid for what they're doing. But it's nothing that you really would notice. But as NVIDIA goes up, if NVIDIA doubled in price, this is going to very, very closely do the same thing. So it would double, or at least very close to it. There might be a tiny bit of a spread difference, and that might be because of some of the fees behind the scenes. But it's going to do pretty much the same thing. Other options. There's also the NVIDIA, the Purpose NVIDIA high yield. Now, the danger with that, though, is that if NVIDIA really explodes, you're going to lose some of that upside potential because they use covered calls. So that's kind of one of those things. So what I would say is if you're planning to ride up this wave and you're looking for a cheaper alternative, I would go with something like NVDA.NE. You can get that on Wealthsimple. You should be able to get that on most brokers. It's on the Neo exchange. Just be careful when you type it in, because if you type in NVDA, that's the same ticker as NVIDIA. And you don't want to accidentally be buying the bigger NVIDIA if you're trying to buy the smaller version on the CDR. So there's many ways that you can certainly get in on that if that's something that is within your risk, because there is a certain risk level to this. Because even though I'm anticipating this, what if I am wrong? What if there's something in that report that people aren't going to like? There's always that possibility. Even though all the hype is saying this is going to explode, it can be wrong, because the only people who know are right now pretty much the people who are writing that report and preparing it. All analysts are pretty much, I don't want to say all, because I don't know about all, but I know all of the analysts that I have seen have pretty much expecting this to be really good. So we will have to see. We'll definitely have to see. And we're going to see live on the air on the 28th. So I can't wait. NVDL off the drop. So yeah, 9 says I'm buying QQCC. So yes, yeah, exactly. So any ETFs, if you're buying an ETF that has, NVIDIA as one of its key components, you're going to certainly get a little bit of a bump from that for sure. Absolutely. All right, what do you think about Pizza? It had a drop last week. Just wondering what will happen to the consumer market side, retailers, so QSR of things as mortgage renewals come up. It it's kind of interesting. So when we're looking at things like Pizza, for example, it really boils down to, for one, a lot of them are probably didn't renew their mortgage in the middle of the pandemic when the rates were really low. Some may have. Some absolutely may have. So I don't think the mortgage rates per se are going to be a huge component of what's going on with Pizza. I think the biggest component right now is, as long as people are sort of pulling back on how they're spending because they're worried about the higher interest rates on their credit cards. They're worried about the higher cost of living. They're still worried a bit about inflation. So as we get that under control and as the rates come down, people will then get to that point where it's like, okay, rates are coming down. My interest rate on my card is not so bad. Maybe I'll stop at Pizza on the way home and grab a pizza. So that is where I think is going to really help them, where we're going to start seeing a bit more. You're going to see a bit more sales coming in, and that is a good thing. So when those sales start coming in, when Pizza overall starts doing better, it's going to definitely help them out. It's going to help that whole sector out. Now, in addition to that, any real estate, of course, that they do hold or that are, coming up for renewal, the lower rates will be better off. They'll be better for them. So it'll be interesting. I think I am expecting to see the consumer discretionary start to pull themselves back up a little bit as we move deeper into rate cuts. Now, the number one sector right now, in my opinion, going into rate cuts is real estate. So, and it goes into those mortgages. So right now, I think this is the time. Like if you're looking for a golden time to get into REITs, I think it's here. And I think it's getting less gold as we move deeper and deeper, because we're already starting to see movement on a lot of REITs. In fact, the video coming out on Tuesday, I am looking at 5 REITs that have already started to show some big movements towards the upside. So that to me is going to be huge. And I'm thinking REITs are big. I'm also liking utilities. Well, the most utilities. There's a couple that like Algonquin is one that I'm just not keen on anymore at all. But utilities like Fortis, Enbridge. Enbridge has been like, holy cow! Let me show you guys this here. Enbridge has been doing absolutely fantastic. Oh, all right. We'll go over to this one here. All right, Enbridge, ENB. So let's take a look here. We'll pull up Enbridge. So let's just take a look at the last year of Enbridge. They are doing well. Like, look at this. They are pulling themselves up out of the hole that they have been into. So I am starting to look really good towards things like Enbridge. I'm like, this is fantastic. This is great. And we're going to see more of this. We're going to see more of this as we move into these rate cuts. So that is, to me, that's fantastic. I can't wait to see how this is all going to turn out. Let's see. Kawachin says, are there any super investors that you listen to? I like Buffett's personality as well as Guy Spear. I will listen to Buffett. I think Buffett has a lot of wisdom. I mean, he's been doing it his whole life. There's no way you can do this your entire life and not have a lot of good wisdom. Like, the guy has seen everything. So but I also take it with a grain of salt, because this is the double-edged sword. He's also been doing it for a long time, is also a con, because the world changes. The way we invest today is not the way we invested in 1960 or 50 or even 70. It changes. There's more assets. You've got crypto now. You've got governments that show that they're willing to do crazy things, like print insane amounts of money. We got a lot of crazy stuff that does go on nowadays. So I think the market And I think everything has changed a lot. In addition to that, we've now are at a sort of at this point where AI is becoming more and more uh, part of the thing, and we're getting to the point too that a lot of the institutional investors are utilizing AI to sort of make a lot of predictions about the market. So it is getting more difficult, I think. Like to find diamonds in the rough. When I say that, I'm not talking about find a stock that's going to explode, but if you're looking at trading wise, because normally if there's something that nobody knows about, that's a really good deal. The AIs are going to find out about it pretty much instantaneously. So it is changing. I think the environment's changing. I think long-term investing, I think will be fine. Actually, I think long-term investing will become more stable as we move into the future. So that is something that I'm kind of excited about. All right. Let's see here. Anyone have super bad lag in their Blossom app? The app got super laggy once I started using direct messages. Right now, I can't even post a reply or comment on the forums anymore. I deleted all my bio and info, and it has helped a bit on my lag, but I still can't post or reply anymore. Oh, that's interesting. That's interesting. Yeah, I expect like the super chats on Blossom. They're a brand new feature. So I think, we're probably going to there's going to be updates to them for sure as they're sort of getting them in. And they are collecting data like, what's happening with lag, what's happening with network, what's happening with latency. So that should definitely improve. Now, I haven't heard this is the first I've heard that there's a bit of a lag with it, but I think that will definitely improve. And I got Prairie highlighted in the middle. I love me my pizza. As in PZA, the stock, I assume, and not so much the pie. All right. Tom says, now that Air Canada has come back up a little, are you thinking of adding to your holdings? Right now, I think I'm sitting at about 5, like in the 0 to 100K. I'll probably, I don't know. I don't know how much more I'm going to add. I'll probably add a few more, but I do want to keep my adjusted cost base below 15 if I can. So right now I can probably add a couple more without going over. Like it'll go up a bit. But that's kind of what I'm thinking. So I don't know. I haven't really thought too much further ahead, but I do have to start thinking about it because I have to write about it. I have to script about it as we get towards the end of the month for the next 0 to 100K. Let's see. I listened to your Discord video link. After 1 minute, he was extremely wordy and boring, and I stopped watching it. Sorry. Oh, is that somebody? Yeah, somebody had posted a something on Discord, and I actually, no word of a lie. I looked at it. I'm like, okay, I should probably check this out. I got about 20 minutes before the stream, so I clicked on it, and then I saw, oh, this thing is like more than an hour long, so I clicked off. I just didn't have the time. I think it was closer to 2 hours. So like, yikes. Yeah, it's one of these things. Like I don't mind. Like just to sort of let you guys know, when it comes to the Discord, I don't mind you guys sharing links to other YouTube channels. If you find something that you think is useful, feel free. Normally, just don't put it in weird places. So this one here, like I think the video was geared towards new investors. So somebody dropped it on new investors. Fine. I'm okay with that. Normally, if it's something that doesn't really fit anyone, just put it in the self-promotion section or whatever. Or if you have a YouTube channel of your own and you want to promote yourself, yeah, feel free. You can drop something in the self-promotion and let people know. Because I'm sure, like, especially with the Discord folk, they'll come and check you out. It's almost guaranteed that they're going to come and check you out. So definitely feel free to do that. I'm not, I know I've been on a lot of different Discords for different YouTubers and where they come up with crazy rules like you can't promote anybody but me. I'm like, no, I'm sorry. That's just not how it works with me. I'm very, I'm just very open to everybody getting a fair shake. And I have no qualms. Like, heck, if you got a YouTube channel and it's finance related, let me know. I'll even take a look at it and, and probably call it out on the air for you. So, I'll do it. I'll do it because, I like to give back that way. G Mark says, thoughts on PKI, Parkland Fuel. All right, let's pull up PKI. I know that they almost we've had them in they've been in the pool, they've been up for the vote a few times and they just never made it. They just never made it. But right now, well, they're kind of on a bit of a downward slope. Yeah, that's a pretty good slope here. Yeah, let's see here. At least they're in the positive this way here. So let's take a look. Like one gander I always like to look as. So as we're looking here, they distribute and market fuels and lubricants. So refined fuels and other petroleum products among the variety of offerings to motorists, businesses, consumers, wholesalers in Canada and the United States. So they have a good product. They have a product that will be in demand, but right now there's just not a huge demand. And I think a lot of it too is, with rates high, people are not, they're doing everything. So, if you have a lubricant or let's say a product that they provide, maybe if you used to use it regularly, you might try to get more out of the old. So I imagine that is impacting their sales a bit. I think once we get more rate cuts, and especially with the US, where these guys are looking at both countries, that could improve their situation. Right now, though, they haven't been doing very well. Now, they do have a good dividend. It's 3.9%, so that's not too shabby. And we'll take a gander here with one last thing here. We'll pull up their key data. Oops, there we go. So I don't know how much debt they have, and they're not providing. So sometimes companies do not provide some information. So that's not good. It also shows that it looks like their dividend has been growing in the wrong direction too. So yeah, this is a company that is struggling. They are definitely struggling. I think that things will start to turn around a bit for them, but I would want to see proof. Before I would put any sizable amount into this, I would want to actually see that they have rounded the corner and see that things are moving in the right direction. Right now, not confident yet. Not confident yet with PKI. Okay. Luckily, UMAX doesn't hold AQN. Yeah. Yeah, good old AQN. Oh boy. Yeah. Kawachin says, no worries, AI, it's not for everyone. The beginning was quite wordy, and I found some better tips at a bit later in the video. Okay, there we go. Oh, sorry, no worries, Al. Anytime I see the word Al now, I always instantly go to AI. So that's kind of funny. So Chad, oh hey Chad, good to see you. I haven't seen Chad a little bit, and we actually said the word Saskatchewan more than once in the video, so that's why Chad is here. Chad is also a big Saskatchewan guy. So yeah, PK 16.52% down in the 5 years. Sold it off a while back. Yeah, and that's it. That's the whole thing. Right now, I'm not seeing anything positive. Now I would want to, of course, if I was even remotely considering them, I would go into a deeper dive on them. But at this point, that's what I've seen is enough to almost make me not want to go into a deeper dive. All right, Monish Pabre. All right, I don't know what that. It sounds like It sounds like a place in India, but I'm guessing. I don't know. Let's see. He talks about asset allocation. All right. Guy Spear is an excellent fund manager. He moved to Switzerland several years ago. Okay. Trying to pull over. All right. So Vic is listening in the car, and he's either trying to pull over to make a comment, or there's some flashing lights behind him, and they're kind of insisting that he pulls over. We will find out later which it is. All right. All right, right here. Ian says, I have SPYI in my TFSA. Paying 15% withholding tax leaves me with 9.9% dividend. I can't find anything I can buy on Wealthsimple in USD that can beat 9.9. Do you know anything close? All right. So this is the thing that I find really interesting. 15% withholding tax in your TFSA. I find that very odd. I find that very odd. Because technically in your well, okay, yeah, in your TFSA, you are gonna pay your withholding tax. Sorry, that doesn't I don't know what I was thinking. I was thinking RRSP. Yeah. So yeah, in your TFSA, you're paying a 15% withholding tax on American dividends. There's nothing you can do about it. You can't even get it back because they don't recognize the TFSA as being a registered account. And a part of it, I mean, it all boils down to taxes, right? You're still going to get taxed no matter what you do. In your TFSA, right, you're only getting taxed once by the US. Now, if your TFSA was non taxable and you're getting taxed by Canada and the US, that's where there would be a mechanism put in to sort of take care of it. But, all right, so that, yeah, that leaves you with about a 9.9% dividend. Um, I can't think of any off the top of my head. There are some crazy ones out there, but, and here's the thing. I mean, it really boils down to, I would honestly, in your TFSA, I would be looking. I wouldn't even worry about how high of a dividend it is. I would be looking for some total return stocks in the US that would push you above 9.9%. And that probably wouldn't be very hard to find. Well, heck, Nvidia for one could do that. But yeah, that's what I would be thinking of. I wouldn't really be worrying about the actual dividends per se. Richard from Montreal says, hello. Do you think Enbridge is still a good buy at current price? I think we're at the beginning of the rate cuts. And as these rate cuts continue, that is going to be more positive catalyst for Enbridge. So yeah, I still think there's room for them to grow. I think they're still going to go up more. And hopefully, and this is what my dream for Enbridge is that they utilize some of the savings on the servicing of their debt and actually pay more of that debt off. So that would be, to me, that would be like a feather in the cap at that point. Al says, I have issues with AI too. I keep thinking people are saying Al instead of AI. That's why name is AL, all caps, Bundy, not all caps. Yeah. Yeah, that makes sense. That makes sense. Um, yeah, it was kind of funny. Well, yeah, like my stepdad, his name is Al, and a few times I was talking to my mom and I was mentioning things about AI, and she thought I was talking about him the whole time, and I thought that was hilarious. But now not so much because he has passed, so we don't talk a lot about him that much anymore. Prairie says, Candace, you were once bullish on OTEX. I am guilty of that, yes. And had it in the 0 to 100K challenge for a stint. Thoughts on it now? Oh, let's pull up this OTEX. So yeah, I was bullish. I do, and I still like the company. So I do definitely like them. All right. But they did have a little bit of a falter. So I was kind of riding them up here in the challenge, and I was kind of looking at them and I was doing a rebalance and I was just like, I don't know about that. It's not that I don't know about them. It's that I kind of got a feeling that there was a chance they could go down a little bit. And so I decided to sell them and I did. I sold them at a profit. And then all this happened. But I still think they're a good company. I think we're actually at an excellent entry point for them. I don't see I see this as being more of a temporary slide than anything else. Would I add them back to the challenge? So that's the question. It's hard to say right now. I don't think so. I think there's better opportunities right now for some bigger profits. And that's one of the things I'm concentrating on. So I'm actually looking. So I'm in a situation right now that it's kind of interesting. The next rebalance isn't until the fall, but there's a few things I've been looking at that I'm kind of at that crossroads where I'm thinking there's a couple of things I wouldn't mind offloading and shifting them more into some of these sectors that I know are going to do really well with rate cuts. So I might make a couple of moves. And I'll let you guys know in the challenge. I might make a couple of moves, but it really depends. So for example, one company that I am thinking about. Now, if I made a move, it would be at a loss, though. I am thinking about DE. So uh, I'm at, because let's show you. I'm going to pull them up here. All right, so here it is, Decisive Dividend Corporation. So I'm going to pull up their 1 year. So they have been on this horrible slide. Um, after they had recovered, they were doing so well, and now they're on this really bad drop. So the question I have to ask myself is, are the opportunities, and this is a trader question, are the opportunities of taking this loss, can I make them up faster than it would take this to recover in a sector that I know is going to do well? So for example, real estate. Would I be better off to do that? Now, if I do it, and here's the beauty. What I will do in the challenge, if I do pull this off, is I will calculate the exact loss we have, and then we'll see how long it takes to get it back. So that in itself could be, actually, that could be a learning opportunity. I would love if this would just come back up. Get back up to 7 before I do it. But I am thinking about it, taking the loss, and then we can sort of run and see how long it takes. Because sometimes, and this is I guess this is kind of the lesson. The lesson I'm thinking with this one is that I hear a lot of people say, I will never sell at a loss. Never. Well, I will sell at a loss because it's still about math. So for example, if I sell, let's say I bought it at the top. I didn't, but let's say I bought it at 11. We'll say I bought it at $11 and we'll say it's at 6. So that's $5 a share. That's huge. That is absolutely huge. So if I was looking to sell, I need to find something that I think I can make $5 a share faster than this would recover $5 a share. Sometimes it makes sense. Now, this is a big drop, so this may not be the one, especially now that I'm looking at the math here, but because I'm kind of just mulling this around in my head. But I'll tell you, I have started to lose, I don't want to say faith. It's not that I've lost faith in a company. So when I do rebalance, and if I sell a company, it doesn't mean that I have lost faith in them. Another company I sold, because we looked at open text, I sold Stella Jones, and I do like Stella Jones. So here we go. Let's just take a gander and see. I haven't looked at Stella Jones since I sold, but look at this. This is a situation where I sold out because I wanted to move it into something that would make more profit. But look at this. Stella Jones has actually done a lot of climbing since then. So that's not too shabby. That's not too shabby at all. Actually, I'll go to the 3 months. That'll give me a better idea. But yeah, so they're still doing, they're still doing really good. Now, I think I probably got out around, where was it? I think it was in the spring. So I think I got out somewhere down around here. So that was retrospect. There's money that was lost. And I probably should have charted that, because, what's important is that whatever I moved that into needs to have made more than, this little bit of profit that would have happened here. So it's always kind of about profit. It's about overall profit. It's about math. It's about playing the numbers. So it's one of those things that I definitely keep in mind when it comes to a move. And I will make a red move. I have no qualms making a red move. But keep in mind too, with DE as well, I'm just going to go back to DE for a second. If I was going to make that move with DE, we'll go back to the 1 year. If I was going to make that move with DE, one of the things I would definitely take into consideration as well is they have a pretty big dividend. So I'm also going to calculate how much I've made with that dividend as well. And I would work that in as well, because even though it may look like, in this case here, a $5 a share loss, if I've received, let's say I received a total of $2 a share out of all of the dividends I've received from them, well, then it's not a $5, it's a $3 loss, looking at it overall from that way. But, I'm still going to, like I said, I'm kind of mulling this one over in my head because they have been annoying me. And I do want to get, something a little bit less volatile. So it's whether or not I'm going to wait for them to rebound, because I feel like they're getting ready to rebound right now. So if I make a move on these guys, it's probably not happening until next cycle anyway. So it wouldn't happen until September. So I'm going to see what happens. It might be a situation where I ride these guys back up, then I sell and move into a sector that I'm really, really, really bullish on. So just to put that out there. All right. Lisa says, isn't he like the Warren Buffett of Canada, or am I thinking of someone else? Let's see. I'm trying to think who you were thinking about. I think I know, but let's see. Buffett, Munger, Discipline. Yeah, I like that. Oh, I changed my last name to all caps too now. Oh, there we go. Ian, ET has a very high dividend and amazing growth. Candace, could you pull it up and have a look? Thanks. ET. All right. I can do that. All right. ET. Here we go. Oh, there's ETY. All right. So this here is Everett's Technologies. Pulling it up, or trying to pull it up. Here we go. We'll go to the 3-year. I always like to start with the 3-year. All right. For the 3-year, you can't really see too much of what it's doing. We'll move over to the 1-year. All right. So it has had some movement up. Now it seems to be in a little bit of a slump here. But let's see here. They got a half decent dividend, 5.766%. Let's check out a couple of their key data points. I do like this return on equity, 27.72. Return on assets, that's pretty high too, 15.23%. Their dividend has been increasing. You can see here just in the last, pretty much last little while, since 2021, it's gone from 18 cents up to 19 and a half. So that's not too shabby. That's not too shabby at all. All right, now, of course, another important thing is what, of course, do they do? So as you can sort of see here, Canadian provider of telecommunications equipment and technology solutions for television, broadcast, and low media industries. That's fantastic. Other than the only issues that I have with this company is that when I think about television broadcasting, I see it as an industry that's kind of on the down move. A lot of people are moving to online streaming. They're moving to things like YouTube. YouTube has never been more popular, for example. So that could be an issue. That could be an issue. But some of the equipment they have for telecommunications, I think those are going to still go strong. And as we continue improving the technology, that would certainly work well for this company. But right now, let's go to the 3-month and see if we can see a bit more trend. We can see a little trend here, but they did have a little bit of a fall. It's one of these ones I would, if I have high conviction on it, sure, I would probably watch it just to make sure that we don't have any issues going forward. But yeah, it is an interesting company. I will leave it at that for now. Let's see. Just hold it out for your TFSA and use the cap space for something else. All right. Whoops. All right. I hold those type of funds like SPYI in my RRSP. Yeah, it makes sense in case I need the income. If not, I just reinvest the income in other ETFs. Yeah, there we go. Kawashin has said, I've been using screeners looking into penny stocks and see a couple of good ones, but I'm a bit leery for any stocks that have only become profitable in the last 5 years. The two that I see as the best are Propel Holdings and Olympia Financial. Yes, those are both interesting ones. Funny story about Olympia Financial. I actually triggered something with them once. I made a trade that accidentally spiked their price. And there was a call from the, first of all, everything got froze over at National Bank. And it was because the Ontario Securities Commission was looking into it. They were like, are you trying to manipulate price? I'm like, no. But that was my fault. I did not realize at the time that I didn't look at the volume. I jumped on a trade quickly. I was looking at them and I was like, oh, okay. And as soon as I bought, and I bought a lot of shares, I went in pretty deep. I was kind of trying to do actually, I was trying to do a dividend capture with them at the time. And I did not realize that the amount I'd put in was going to spike their price, and it did. And then I was like, uh-oh. And then I got out right away. Now, I made no profit. That was my saving grace on that one. I made no profit. And I even pointed that out. I said, look, I made no profit. Once I realized, oh, this is a company I probably shouldn't have touched because they were so small. It was all forgiven. It was all forgiven. And I got a slap on the wrist saying, don't do that anymore. I'm like, okay, sorry. But Olympia Financial. Oh boy, that's funny. But Propel Holding, I think I do like Propel Holding, and I do like Olympia Financial. So I think those are they're penny stocks, but I think both of them have potential. I do think they have potential for sure. Abalash says, are there any withholding tax on U.S. growth stocks without dividend? No. I mean, there's no withholding tax. If you've got no dividends, there's no withholding tax. But if they have a small dividend, then there's a small withholding tax. But like I said, right now I hold, I've got 3 stocks in my USA TFSA as part of the challenge. And there's a 15% withholding tax on them, but none of them have really big dividends. So we're talking very, very little that I'm losing. They're not stocks I'm really interested in for their little dividend. I'm interested in them for the growth potential on them. All right. Let's see. Then your return is only 9.9%. Don't you want more of a return than 9.9%? It isn't, though, because if you're putting that in your RRSP, it is recognized as a registered. So in that case, she'll get the full 15%, the full. So the whole thing. Let's see. I believe U.S. withholding taxes are only on interest and dividends. There we go. Ian says, Al, I also hold it in my RRSP. I'm trying to fund a retirement. I like dividends. I have a bunch of USD in my TFSA. I want exposure to the S&P 500. I like the 9.9%. And that's the thing too, like, because it's not like it's a surprise, right? If you are, let's say you're putting something, a US high dividend stock in your TFSA, and you're fully okay, like, let's say 9.9%, you're like, that's fantastic. I'm okay with that. Then there's nothing wrong with that. Is it the most efficient? No, but there's still nothing wrong. Because I mean, if you put it into your RRSP, sure, you'll get the full 15%, or whatever the dividend is on it. You're going to get that full dividend. But instead of losing 15%, you're probably losing more in the long term because that puts the entire thing as taxable. So you will pay taxes on that when you pull it out. And they won't be like the taxes on a dividend. It'll be fully 100% taxable as income when you pull that out someday from your RRSP. So you still pay taxes, but you're just you're not seeing it right away type thing. And usually, if you're pulling it out later when you're at a lower marginal tax rate, you're not paying as much. Let's see here. Let's see, the withholding taxes only apply to dividends, so growth stock gains are not dividends. They are capital gains, so they would not have any withholding tax. Okay, there we go. Jay says, whoops. There we go. Leave some funds for September. The market can still go sideways. I ran out of funds a couple of weeks ago from Japan carry trade. Uh-oh. Yeah, and that, of course, the whole carry trade thing in Japan has been in the news a lot lately. And the nice thing is, there was talk from Japan saying that don't worry, the interest rates, we're not going to do anything drastic, at least for the next year or so. So that has made things a little bit better. So hopefully there's still some profitability to using the yen, but we'll have to see. We'll have to see as things move on. Ian says, so any gains on U.S. stocks are not taxable in a TFSA. Right, your gains are not, but your dividends are. That's the thing, because your gains, once you pull them out, you're fine with that. They don't go after that. It's just that you're receiving a payment from outside from the US in the form of dividends. So that part becomes taxable, but the gains, no, the gains are not taxable at all. Those are still 100% tax free. I mean, otherwise, if you think about it, if your gains were taxable, your capital gains, what would even be the point of putting it in your TFSA? Because in that case, there you wouldn't. There'd be no point. Kawashin says, it seems that every couple of years, rate environment changes, extension, and companies that are geared to certain environments. Do you have any not to buy at the top? Yeah, I mean, it's kind of one of these things. Like the market is always changing. And, when I look, and this is kind of funny because sometimes I will look at, I've got like videos from 2.5 years ago. And the stocks in those that I'm highlighting are not the best stocks anymore. They were at that point. So sometimes I'll even get somebody who will look at a video from 2.5 years ago and they're like, really? You think this is the best? I'm like, well, 2.5 years ago, I thought it was the best. Not anymore, no. So sometimes that will happen. It's kind of a funny thing. But yeah, no, the market's always going to be changing. And you kind of, as an investor, you need to be agile. You need to be looking at what other companies are doing, look at what the environments are and how those are going to impact companies. So for example, right now, we're moving into a rate cut. So we're moving into a rate cut environment. Well, that is going to be big on a lot of different sectors. For example, real estate is going to do well because of it. Because, well, why? It costs a lot of money to basically, like if you're a REIT, one of the things that you're doing is you're buying more properties. You're actually buying and selling. So in a situation where the rates are high, buying means that you're going to have higher mortgages. You're going to have much more overhead on that debt that you're going to be required to finance it. And in addition to that, you're also going to have that situation where investors are going to look at you and say, well, you know what? They're not as profitable right now, not in these high rates. So, maybe I want to move my money elsewhere. And that's what happens. Investors start to move out of REITs. They start to look at other things, other options. For some of them will go to bonds, for example. There's a lot of different things that you can move to. But now that we're moving into a situation where you've got REITs, because everybody moving out has driven the prices down of a lot of REITs, which has driven up the yields because yield is a reflection of the price. So now the rates are coming down. People are moving in. They're getting these fantastic yields at the bottom, on the basement floor. And we're going to watch. We're going to watch the demand for REITs increase. We're going to watch the price go up. Those yields, of course, as the price goes up, are going to start to come back down. But, eventually we'll get back to where we were before, where REITs will be just one other alternative play when it comes to income. But that ride up from now to then is going to be fantastic. It's going to turn REITs into a little bit of a total return machine. And that, to me, that's fantastic. I plan to ride it. It makes sense. But I'm not going to stay on them. I'm not going to ride to the top and then stick around. I'll ride to the top and then I will look and see what the next opportunities are. What the current at that time, the economy, the politics, what is going to be the next sector that is going to thrive with the conditions going on. And then I'll move to that sector. Simple as that. I'll just move. I have no problems doing that at all. All right, let's see here. You guys keep talking. I'm gonna jump over conversations that don't involve everybody. Let's see, to buy even more div stocks. All right. Wondering if you can look at the fundamentals for Northwest. All right, so Northwest Health here, NWH. Let's take a look here. All right, Northwest Healthcare. Now, this used to be one of my, I used to love this read a lot, to be honest. All right, so right now, they did not do well. But this is a normal thing. I do not, when I look right now at a REIT and I look at this big slope, so we got a bear market, then we got rising rates. So you got to forgive that. You can't, if that scares you off and you're looking at a REIT, then you're not thinking about what a REIT does and how a REIT functions. So I will cut that, most of that away, and we'll come over to the 3-year and take a look. You can see that they have the fall has stopped. They're getting a little bit of a price movement up. So they should be getting ready to recover. Like these rate cuts, I think are going to do well for like Northwest Health. I think they're not off to the best start yet, but I think things are going to turn around. And I'm, like I said, I'm very bullish on REITs. There are some REITs out there that have already begun and are doing incredible things. But when we look at them, so well, I'll show you one right now. We're going to go to Sienna Senior Living. Now, let's go to that 3-year. You can see we got that same thing happening. But boy, oh boy, look at this. They've begun to recover pretty fast, and they're making a pretty big run of it. I would be absolutely surprised if this one doesn't show up in Tuesday's video. But yeah, they've been doing really, really well. Some like Northwest Health, they're just a little bit behind the curve. Or they could be the curve. I mean, this, you could say someone like Sia is pretty much ahead of the curve. So I do think we're going to see some interesting things. I think it'll be really interesting to look at Northwest Health towards the end of the year and see how they're doing. All right. Let's see. And Muggsy says, sometimes you need to sell at a loss to be able to get on a faster horse. That's exactly what I was saying. Exactly. Yeah, absolutely. Your gains on U.S. stocks are not withholding taxes, but the capital gain is still taxed by the Canadian government. Yeah, it's taxed if it's not in if your TFSA. If it's in your TFSA, it's not taxed. You're fine. Let's see, Monish, ET, Energy Transfer. Oh, we were looking at the wrong ET. Oh, thank God. You were looking at the U.S. one. Okay, all right. Duh. I was looking at this other one, and I'm like, Jackie, I'm not sure that this is doing as well as you seem to think it is. All right, this is U.S. Energy Transfer. Let's take a look here. Yeah, this is a different story. This is an absolute different story. This is a beautiful looking story. Gotta love it. It's got a lot of buildup. I'm liking that quite a bit. Yeah, let's see. Everything looks solid down here. That's not too shabby. So look at this, 32 cents USD. So that's a 7.853% dividend yield. All right, let's go in and take a look here at their key data. You got to take this with a grain of salt. Their return on equity, 10,950%. All right. If you see a number like that, you can't take it seriously. There should be little bells that go, yeah, grain of salt. Maybe a whole salt shaker. Take this with a whole salt shaker. Return on assets, though, 3.48%. And look at this. The dividends have been increasing. So back in May of 2022, they were paying 20 cents a dividend. Now they're up to 32 cents. So this is a company that looks really good, Jackie. This looks a lot better than Everett's technology. Let's take a look and see what they do. Let's take a look. Obviously, some kind of energy transfer. So look at it. Okay, so they have crude oil, natural gas, and natural gas liquid assets. So mostly in Texas and the U.S. mid. Yeah, that's fantastic. I like it. And here's the beautiful thing. Right now, let's go to 3 months. All right, you can see a little bit. So a little bit of the struggle right now with natural gas and with oil. But once oil really starts to pick up, you could really see another big pump in. And no one, no joke intended. But you can definitely see a big pump for sure. This is a nice stock. This is definitely a nice stock. I'm gonna. Oh gosh, let's go back to that 3 year and look at it again, because that's like moonshot. Like do on my way to the moon. Nice. It's like I almost need like I wish I had like a moon I could just pull over here and just drop. That would be kind of cool. But yeah, energy transfer. That's a good find, Jackie. That is a good find. I like it. I like it a lot. Yeah, it looks like this is the company I should have I should have had this in my US version. I like it. I do. Everlash says, if you day trade, wouldn't that affect share price? Will that cause the regulator to get back at you? Not necessarily. I made let's just say it was a very, very big trade because it was a very big trade. It was, it was very big. I'll leave it at that. Normal day trading, you're probably not going to hit that type of numbers. And you're probably not going to impact it that much. It was just, I was trying to take advantage of a quick little thing. And it was a bad move. It was a bad move. I'll call it that. It was a bad move. Yeah. But the beautiful thing is if it had gone the way I had planned, it would have made me a lot of money, but it didn't. I got out with exactly making nothing and losing nothing. So I'll call that a win. What do you prefer to sort screeners by? EPS growth, ROA, revenue, or something different? Well, it depends on what I'm looking for. So it really depends on what I am looking for. So if, for example, I am looking for so a lot of times what I'm looking for as a total return investor is I'm going to use ROA in there. I'll use a lot of different things. Like I'll put ROA, for example, in there because I want to, to me, that's a good indication of stability in the stock. So I will usually have ROA. I will usually have a price range on where I'm looking for. So for example, if I am not looking for penny stocks, I might put in nothing below $5 just to sort of get rid of the penny stocks out of there. I will also, if I'm looking for example, if I'm looking for dividends, I'll put in maybe, for example, if I'm looking for a total return stock, I might actually put an upper limit to the dividends. Maybe I don't want dividends above 10%. Maybe I don't want dividends above 5%. I will also put in growth. So, how much of a change has it made in the last, in the year to date, in the last year? And especially when I'm looking for a company that I think is going to do really well long-term, I might also throw in some revenue. Is the revenue growing year to year? So I'll use as much as I want. And here's what I normally will do. I'll put in my initial categories and I'll pull up my list. And when I look at the list, if it's a big list, I might go back and say, okay, well, let's make some of these a little harder to narrow the list down. Or maybe I'll add another criteria. And, because that will sort of help lower that list down. Maybe, for example, I found some great ones and I'm like, okay, well, let's lower the debt amount. And I might put that in. And then that will sort of help me narrow things down until I find something that I'm happy with. Can you please spike the price of TD Bank? That would take a lot more money. That would take, I don't see TD is big enough that I don't even know if Elon Musk could spike the price of TD Bank, to be honest. Well, he probably could. If he put everything he had into it, maybe. Let's see. Ian says I might buy SPY in the TFSA instead of SPYI. Okay. There we go. Kawachin says, is there a graph that shows market cycles and what to do when? Don't think so. I've never seen a graph that sort of shows, okay, well, when the market's doing this, this is what you should be doing. Not to say that somebody shouldn't make one, because that would be kind of an interesting thing. I'm going to bring back my big head. Probably when we're not looking at something, I should bring back my big head so that way there I don't accidentally get a copyright claim from the Paris Grand Slam again. They've got me twice. They got me twice. If you want SPY in the TFSA, Ian, maybe you might consider SPLG. There we go. So it's basically SPY with a bit lower fees and without all the options trading involved with it. And if you want to gamble a bit, and hopefully you don't need the money that badly, and you want to build your TFSA room, you could buy, let's see, UPRO, which is super risky, but it does invest in the same as SPY. All right. Lisa says, I hold SIA, and I am quite happy with its performance in the short term. I've owned it. Yeah. No, SIA has been doing absolutely fantastic. Vic is back. Vic is back. I guess the police finally let him go. Prem Watsu of FFH is Canadian Buffett. Yeah, exactly. So Fairfield Financial. Mario says, I like the stock's 3-year return. Kawachin says, I am thinking of buying some companies that have done amazing, forever, and terrible in the last few years as a contrarian play. For example, RY was beat down, then BN, and now CNR. Yeah, I mean, it's kind of one of those things. Like when if you're playing the news. So for example, if you know a company, so for example, we'll use the railroads. So both CNR and CPKC, we know they're going to be good stock. We know that they're recession proof. They're your circle the wagon foundation stocks. They're damn good. And there's nothing ever wrong with holding them. But when you do get these little scandals, or if you get a strike or things like that, and if you get a nice big dip because of it, those do become very good points to get in, because they're going back up. We're never going to get to a situation where CN goes out of business. Maybe if we develop teleportation, that might be a different story, but it's just not going to happen. These are absolute core supply chain. The mining sector needs CNR like crazy. That's the only way to really get the materials out of the north. They're never going away. They're never going away. They're always going to be moving up overall long term. So those are good examples of stocks to, when bad things happen, get in on them. Get in on them for sure. Also, Air Canada. Air Canada is one of these ones that when they get really low, I expect them to be back within a year. I expect them to be back above 20. That's why I've been, started to add them in the 0 to 100K, and I'll sell them at the 20. I'll hold them until they hit 20, but I'll sell them at 20. And I probably will. I haven't had a chance to think about it because we talked about this a little bit earlier, but I'll probably add more for sure. Let's see. Vic says, if I buy Air Canada at $12 for about 50,000 shares and it goes up to 14, I'd be up $100,000. Yeah. Yeah. That's the thing, right? If you have a lot of money that you can put in, and you also got to consider, this is the risk profile. Like with Air Canada, it is a safer move. Now, if you were putting in $50,000 at $20 a share, I would be, or if you're not 50,000, but if you were buying 50,000 shares at $20 a share, I would be like, that's probably not the best move right now because, it might go higher, but it could also go back down again and hang around under 20 for a while. So, but the lower they are, like, when you're down at the 14s and the 15s and even the 16s, it's not a bad buy. It's not a bad place because they're going to come back up. Even if it's a situation where they just come back up for a month or so and then go back down, well, there's a month where you can take some profits. Sit on it if you want. Wait for it to go back down and buy again and rinse and repeat. So it is one of those things that you can certainly do. All right, guys, we're heading towards the end. We're getting close. We've been at this for a little over 2 hours. So if you got your final questions, drop them in. And here's the thing. Here's the thing. I always say this. When it comes to final questions, there's many times the final questions have kept us going for another hour. So I never rule that out. But if you get the final questions, drop them in now. I'm going to have a coffee. I'm going to have some coffee because my coffee is getting cold. It's still good, though. It's still good. It's probably because I've been talking for 2 hours. I find if you're talking for a long time, it doesn't matter what you're drinking. It's a good relief for your throat. That's for sure. Starbucks at $100. Yeah. How has Starbucks been doing lately? Let's pull up Starbucks. Ba-ba-da. S-B-U-X. There we go. So 94.81 right now. All right. Come on. It's not we'll go this way. There we go. All right. Here's good old Starbucks. That's quite a jump. But you know what that is, right? That's a new CEO. People were excited about that. Oh, could you imagine if you had bought in, if you had been holding these guys, if you bought in at 75, and then they announced their new CEO, and oh boy, that could have been a huge profit right there. But if we go up further, let's go out to the 10 years. All right. So you can sort of see with Starbucks, right here, it's very distinctive, the pandemic. Starbucks did well coming out of that pandemic and that bear market. Then we went into, here's the bear market, sorry, bull market, bear market. Then they recovered well, and then we got to that point. We just got to that point. What the heck's going on here? Well, that was when, that was a lot of the rate hikes, and people are just waiting for things. And now we got a new CEO, so it pumped them back up here. We'll have to see. I have a feeling that this is going to settle a little bit lower after this, after the hype has gotten through. The whole, buy the rumor, sell the news. Well, now that the news has happened, it might be time to see what happens. But it's kind of an interesting thing. Like, I know myself. I have my Starbucks mug. I mean, I love my Starbucks mug. I put it up so you can see the little Starbucks guy. But I very rarely actually go to Starbucks and buy something. I'll go and buy their mug. I'll buy their mug. I don't drink Starbucks coffee in their mug. I drink my regular coffee. I'm not going to pay for a cup of coffee. I'm not going to pay I don't even know how much it is anymore. It used to be $5. I imagine it's like $10 or something nowadays. I really don't know. But I think until the economy, now once the economy starts getting better and as the rates come down, that will be good, I think, for Starbucks. They sort of fit into that whole consumer discretionary area. And I think that will definitely help them come back up. And Mario wants to look at Hydro One. So Hydro One is just simply H. Whoops. H. Here we go. Of course, it doesn't want to show me, so I'll just do HYDR. Hydro 1H. There we are. All right. Here we go. Here's Hydro One. Now, once again, it's a utility company, so rate cuts are going to do well for them. And you can see it has already begun. So this has always been, I've always liked Hydro One. I've always had an affinity for them. And even if we go back here, so this here, is, even during the bear market, they were still doing okay. So they've been doing really well. Now, I have a feeling that their debt is probably not out of control. So they were probably really wise with their debt. Let's take a look. All right. So here we go. Yeah, they've got 156% debt to equity ratio. That's not that bad. So they've certainly been looking at it. Their return on equity, 9.44. The return on assets, 3.29. So definitely like that as well. They do have a dividend here that has been going up. So 2022, it was 28 cents. Now it's 31.4 cents. So they've been moving in the right direction. I do like what I've been seeing with this company. So yeah, Hydro One. I think they're a really good utility. If you were somebody who's getting out of Algonquin, this is probably a much better safer option for you if you're looking, if you want to stay in the same sector. Yeah, go with Hydro opposed to Hydro One instead of Algonquin for sure. How many times has Air Canada honestly bankrupt? Well, they've never officially gone bankrupt. Air Canada has that. They have that big distinction of the fact that all the politicians use it. At one point, they were officially, and I think they might still be considered officially Canada's airline. So we're in a situation where I don't think they can go bankrupt. The government will step in. The government always says, "Yeah, we're not going to do it anymore," but they always do because, right? Honestly, we can't afford to lose our two main airlines. We just simply can't afford to. So I wouldn't be worried about Air Canada going like, wheels. I was going to say wheels up, but or wheels belly up. I wouldn't worry. Let's see. Can't believe I spelt on it by Disney, y'all. There we go. Let's see. I'm not saying it's going to happen, just saying be careful. Okay. Well, let's see here. Well, and let's just go back here for a second. All right, let's pull up Air Canada. I want to give some fairness to the statement. And if we go back to our 5-year, so you can see the pandemic, but before we'll have to go to the 10-year to fully see it. You can see they had a nice buildup. Then we had the pandemic. Okay. So one of the things that happened, not immediately, it didn't happen here, but it happened in the buildup. After the pandemic, they did a lot of share dilution. So that has pretty much eliminated them getting back to $50. It's just not going to happen. But the 20s is definitely reasonable. And right now we're down at 15.54. So the 20s is more than reasonable. So I do see them getting back here, but you're not going to, if you want to play this to get back to here, forget it. It's not going to happen. It's pretty much like, Kowalshin says, just be realistic with Air Canada. Understand that, and this is the thing, even though it's gotten back, it actually made it at one point up here to $29. And even right over here, it made it to 25. 25 to me, it's like, play it a little more safe. If you're making any kind of play, sort of like what I'm doing on this one, right about here, right? Well, okay, that's as close as I can get. Right there at $20, that's a perfect place. Get out at 20. Don't get greedy. Don't try to ride it back up because it could tank again, come back down and be back down in here again. I don't see it though going much lower than 14. I think, you could argue, look way back here. It was like at 7, but that's even during the pandemic, it didn't get down to 7. It got down to 12.49 at the worst part. And then very quickly, it was back up to up to around 15, 16. So we are in a bottom area for Air Canada. So I wouldn't be super concerned, but always be careful. Always be careful. It doesn't even matter what stock you're looking at. Still be careful. Don't never go in blind. Always pay attention. Always, always, always. Kevin Cass says, just in time for final questions. Good afternoon, gang. All right. And Ron says, can you share what REITs your new video will be about? What, you want me to just tell you what they are so you don't have to watch it? Is that it, Ron? Is that it? I feel so betrayed. I will tell you that SIA is in it. We kind of looked at that. So SIA will definitely be in it. I will give you guys one more. I'll show you one more that will also be in it because there was 2 of them that we were talking about. The other one here is EXE, Extendicare. They are also in it. So there you go. I'm giving you 2. So you got 2 of the 3. When we look at Extendicare, we'll look at the last year on them. You can see as well, they've got a nice movement up. So they have begun that recovery. So you will see that. Now, Ron, if you want to see it one day early, like if you want to see this video tomorrow instead of Tuesday, you could always join the channel memberships. There's a little link down below there that I think it looks like a dollar sign. For the price of a cup of coffee, you can find out one whole day early. Plus, you can then go to the exclusive channel member live stream on Thursday. I heard a rumor that I'm going to be there, so of course I'm going to be there. Just something to think about. But yeah, it'll be a good video, Ron. It'll be worth the wait. It'll be worth the wait. A 9 says, "How do you like to trim profits for long-term investing?" It depends on what's happening once again with the market. So if I have something that let's say a long-term bullish company, I will usually look at how they are in comparison to what my portfolio allotment for them. So for example, with CNR, if I'm above that 5%, like if I get significantly above my 5% holding, then I might look at selling a share. Take the profits from that one share, move it into something else just to bring them back down. And that'll happen as things grow. So I do play with things a little bit like that. I haven't had to do that in a while yet. And that'll probably be like a spring of 2025 video on the 0 to 100K, probably. But that's kind of how I will do it. Now, there can be a situation where if, for example, let's say I saw something in the market that I felt was, I don't want to say a sure thing. I hate to say that. But if I saw something that had a really high probability of making me some money, some serious money, depending on my risk profile, I could, in a situation like that, peel a couple of shares here and there off of some of my bigger stocks that I love. I could certainly do that just to sort of free up a bit of finances to move into this. And once again, as long as it was within my risk profile, and my risk profile is it does tend to lean a bit on the conservative side, but it's got streaks. It's got streaks of some pretty good risk in it too at the same time. But that's kind of how I would look at it for sure. Kawachin said, "I almost bought Bombardier at $2. Wish I did now." Oh, that would have been a nice. That would have been nice for sure. Vic says, "At 10,000 subs, we'll do a personal background video. Your journey up the mountain." Ooh, maybe. Let's worry about the 5,000 now. 10,000 is still a little ways off, but yeah, 5,000. We're climbing. I think right now, I don't even know what we're at right now. We're at, let me just refresh so I can give you a up to date. There we go. We're at 4139. 4139. So it is getting there. It's getting there. So we picked up since that open to close live stream. That wasn't that long ago. We picked up 139. So we'll get to that. Like according to my projections, we're going to hit 5,000 this year before the end of the year. So I do have to start thinking about that. I have to think about what am I going to do? What am I going to do? So could be interesting. There we go. Let's see. Can stockholders be bankrupted with Air Canada even if the government does not let it fail? It depends. It depends on what happens. So let's just say Air Canada was going to go bankrupt. Well, what ends up happening is you take a look that when they liquidate everything, it sort of works out how they're going to pay things back. So in some cases, it depends on how much money they have. So when they go through the whole process, some of it may be earmarked for shareholders to pay them back at a particular price. But it really depends. It can be a little bit different depending. Now, if there have been situations where companies have gone bankrupt, and then they've got nothing. They got no money to pay back any of their investors. That does happen. And then in those situations, that's where, you heard that rumor, oh, it's going to go to zero. In that case, it is going to go to zero. It does happen. I don't feel like, I know there's a lot of people with bad blood, like Air Canada, a lot of people hate Air Canada. I personally would rather fly with WestJet, but when it comes to making money and understanding stocks, that's a different story. It's just a different story. Patricia says, "I did when I started investing, but sold because I wasn't sure about the business." That's fine, and there's nothing wrong with that. One of the things, and this is kind of out of Warren Buffett's book. is that he likes to invest in companies he understands and has good feelings about, and that makes sense. That makes sense. So if you have a company that you're not feeling good about it, um, there's nothing wrong with getting out. There's absolutely, and even if you make it, even if you get out and that company then goes to the moon, so what? Is it worth making? Maybe you're going to make $1,000. Is it worth making $1,000, but to be worried completely to death for months as you're doing so? No, not really. So yeah, there's nothing wrong with high conviction stocks and having a better feeling about a stock. And that's one of the things I love about fundamentals is that you can usually see stuff going wrong in the fundamentals before you get the really big bad issues popping up in their share price. And then you can often get a little bit of a heads up so that you're like, okay, I better get myself out of here, or at the very least, I better have an exit strategy. So there's nothing wrong with doing that. Yeah, no, you're welcome, Mario. You're welcome. Is Sia a good buy today? Well, let me put it this way. We're at the beginning of the rate cutting cycle, and this is going to be a cycle that goes well into 2025. So we're at the beginning. And yes, they started off with they started off strong. That doesn't guarantee, nothing's guaranteed. It doesn't guarantee they're going to stay strong, but all indications look good for them to continue moving forward. And here's the other thing. You got to look at what they do, right? Long care facilities. Well, there's a demand for them. And as what's going to happen to that demand as more and more baby boomers keep getting older and older, that demand's going up. It's not going down. So we got an increased demand. We've got a economic cycle that is good for REITs. That's kind of like a perfect storm to help them do better. So I believe, yes, I do believe they will go up, continue going up. They may not go up as fast as they already gone up, but they're still going to go up. So I do believe that they're a good buy. Yeah, I would say so. Let's see. I'm also thinking of Urban Fund. Do they have an amazing dividend cadger? I don't know. I haven't really looked at Urban Fund, to be honest. So that would be something I would have to look at before I could really, give you a whole bunch of information about it. Oh, you gotta love the frogs. There we go. Yeah, I would need to take a look. I need to take a look at Urban Fund. Let me just see here. Urban Fund. Here we are. UFC. Oh boy, penny stock. Oh boy, yeah, and they have been moving in the wrong direction. Yeah, gotta like that. Well, at least they're profitable. They're making some money, so they got 12 cents here. Let me see what they do. Let's see. Okay. So they are a real estate company, real estate development company. Engaged to invest in real estate or real estate related, owns, develops, manages, and operates residential and commercial sector properties in Canada. Okay. More importantly, one thing I want to check out here is I want to see their debt. They're not listing their debt. You gotta love that. The return on equity, not bad. They're providing let's see here. Oh, is that a quarterly dividend? It looks like a quarterly dividend of 1.3 cents. Yeah. I would really want to know what's going on with their debt situation. So this is one that if I was looking at it, I'd have to dig in a bit deeper. But the one concern I have right off the bat is, and let's just go to the 3-month. One, it's a penny stock. That's a concern. Absolutely. But I'm just not seeing a lot of movement to the upside yet. It could be, though. We're early in the rate cuts. So this is one that if you're interested in it, I wouldn't put a lot in. I think there's a lot safer. There's a lot safer ones out there. If anything, this would be one to watch, or maybe if you have, I've talked about play money that you're absolutely okay with losing. You could certainly do that with that, but I would be a little careful. I would be a little bit careful of this one without more information. So specifically, I want to know what kind of a debt load they're carrying. Um, I would probably, of course, go to their website and see if I could read some actual financial reports to give me some better informations. But right now, this is to me, this is risky. One, penny stock. Penny stock makes it very risky right off the bat. But if you're looking at less risky stocks, this probably falls into that based on to like their their return on equity, return on assets looking half decent. Uh that's a pretty high yield though for such a small company. But I would really like to see what's going on with their debt. Definitely. And like I said, play money only. Play money only on this. Just because penny stock, penny stock. Al's got it right here. Penny stocks are equivalent to buying a lottery ticket. Yeah, but it depends on the type of lottery ticket, right? Like, if you buy a a scratch to win ticket, you might have a slightly better chance of at least breaking even, opposed to if you go for the big lotto, the Lotto Max or Lotto 640. I don't know. I don't buy lottery. I have though. I have bought the occasional scratch ticket though. It's kind of funny. I actually have a very funny story about a scratch ticket. Um, so I was working as a manager at Superstore quite a while ago, and I had no money on me. I did not have any money, and I didn't bring a lunch. So I was sitting up in the manager's room with the rest of the supervisors, and I just went over to somebody. I said, "Can I borrow $1?" She was like, "Well, why do you want to borrow $1?" I said, "Well, because I didn't bring any lunch. I'm going to borrow the dollar. I'm going to go down, get a scratch ticket, and win and get my lunch." She's like, "I can just give you the money for your lunch." I'm like, "No, I just want $1." She says, "Okay, here, you can keep the dollar." So she gave me a loonie. I went down to the store. I got a scratch ticket, won $10. Went over to Subway, got a sub, came back, and said thanks. And everybody couldn't believe it worked. I don't even know why. I was just convinced it would work for some reason. But it was hilarious. It was kind of probably the flukiest thing. Um, but it worked. It worked. So it's like, why not? But that normally doesn't work. I just want to point that out there. That was probably 1 in a million that worked. And I don't even know why it worked. And in a way, I kind of wish it hadn't worked because, it just, it now gives me a crazy story. So I'll give it that. I'll give it that. Let's see. I know I deleted the comment that looked a lot better a year ago. Oh, maybe. Let's see. UFC looked better. Yeah, maybe. Yeah, right now it's kind of looking like it looks like a dog's breakfast. But most REITs are looking like that, so I'll leave it at that anyway. Vic says I like hospital lotteries. Yeah, absolutely. Paul says you didn't mention the second labor dispute on the west coast of BC that could also affect things. No, I did not. I did not. I haven't seen a lot about that in the news, but I have to dig deeper into that one. That's probably why I haven't mentioned it because I heard some rumblings of it, but I didn't look into it yet. So that is another issue right there. If we start to get more labor disputes on the West Coast, because pretty much everything coming from Asia is coming through the port of Vancouver. So we kind of need everything to be in working order. We can't afford any kind of disputes, whether it be at the ports, whether it be at the rail. We cannot afford it. Absolutely. Let's see. Perry says, I see Diversified Royalty Corp as a penny stock. Am I wrong in this thinking? I would call them I kind of call them penny adjacent, but yeah, they are close. They are close. Now I do hold I do hold them in the 0 to 100K because this is a stock that I have actually I've actually liked the stock for years. We'll go to the 3-year on them. So they pretty much maintain. And this is kind of the thing with these guys. I don't even see them as being a growth stock. I see them as being a straight up dividend stock. And right now, they maintain usually in this vicinity. I'll even go further back. Let's go back to 5 years. And you can see before the pandemic, they held this vicinity right in here. Pandemic, they got themselves back up, and even with the bear market and all the rate hikes, they've still managed to hold that level. That's one of the things I have liked about them is the fact, boy, that was bright orange, is the fact that they've been able to hold that level. And at the same time, they've got this fantastic dividend, this 8.864%. So I have liked them for that reason. And also the fact that they're cheap. It's like, you got $3 or something sitting in your thing, and it's like, what can I do with it? I'll just throw it into DIV, and that means I'm going to get an extra 2.1 cents in my dividends next month. But no, they've been good that way. Like, to me, they're a very reliable income stock if you're looking for a nice little 8% dividend. And I like how they respond. This is what I really like. I like how they respond to the pandemic. I like how the bear market, not even really a blip for them. So I do like this stock. So I call them penny adjacent. But yeah, definitely something I like. Let's see. Question says, I like penny stocks with high SP from fundamentals, not low with high market cap. Okay, fair enough. Fair enough. And to be honest, some people have made a ton of money with penny stocks. It's not unheard of. It does happen. But you got to either sometimes you have to be lucky, or you really, really have to be good with your fundamentals to make sure that you have picked the right ones. Ian sold EIT. All right. I believe he's going to say, yeah, in your non-registered. That's what I'm going to say. Yeah, that's not bad. Not bad. And then bought DIV. Down a bit. Hope it works out long term. Yeah, you're not going to get a lot of growth from them. Although I believe analysts have been predicting them to get up to about $3. Let's find out. We'll go to Simply Wall, and we'll see here. DIV. Here we go. Diversified royalty. All right. And here we go. So here's the analyst prediction. So they're actually predicting, they're predicting $3.85. Now that's a 36.5% increase. I don't see it being that high. I can see them getting to $3, but I don't know about 385. So, and it does mention it with agreement low. So that means that there's a lot of disagreement amongst them, but that seems to be the average. I would say $3 would be reasonable in a year, but I can't see it going much higher than that. Do you know much about Kraken Robotics? I was going to buy at $1, but flinched. Really regretting it now. Speaking of penny stocks, I've heard of them. I have heard of them. I haven't really looked at them, but let's take a look. Kraken Robotics. Here we are. So right now they've just sort of broken out of the penny stock. So they're definitely penny stock adjacent. Let's take a look at their 3-year. So here's this interesting thing. So that is not bad. So they've pretty much have gone from 41 cents, basically since about a year ago. So the last year they've more than tripled in value. Now, here's the thing. Let's take a gander here. So yeah, they're involved in the design, manufacture, and sale of software-centric sensors and underwater robotic systems. Kraken. That's why they call it Kraken, because release the Kraken. All right, interesting. Okay. This is it. I like what they're doing. I do like what they're doing. That is kind of interesting. Now, let's go into their key data. So remember, this is penny adjacent. They broke free. They broke free. This is not bad. Look at this. 19.91% return on equity, 7.51 return on assets. Their debt to equity, not that bad, 51%. So that's not too shabby. This is not a bad company. This from the onset. There's more risk because it's small, right? Obviously, if you're looking at a company like this, they can just as easy fall down. But right now, there is robotics is big. Now, I don't know about the need for underwater robotics, but this is a company that if I saw this, and I have, it makes me want to look deeper. It makes me want to look deeper and see what's going on. So it's going to be interesting. I think it'll be interesting to watch. I'll definitely keep my eyes on Kraken Robotics. I'm not ready to jump in yet, but it could be interesting for sure. Michael says, which was the last stock? What, before this one? Kraken Robotics. Before that, I think it was Diversified, wasn't it? Diversified Royalty Corporation, so DIV. So I hope that was it. Go, Jonathan. So you've done a couple of videos on XEI, but have you ever looked at XDIV? XDIV has come so close to winning. I want to do XDIV. I really, really do. Here's the thing. It just can't win. I don't know why, but I want to do them. I want to do them. So keep pestering me, Jonathan. Pester me to death on XDIV. I will find a way to fit that in somehow because I really, really do want to do it. Every so often, there is a company that I think people would like if they had a chance to look at it. This is one of them, and this is not even a company; it's an ETF. So, yeah, rightfully, that second XEI video should have been XDIV. It really should have. I don't know how it got past me because I ended up doing 2 deep dives on XEI quite literally, not even a month apart. Somehow it didn't dawn on me. It somehow snuck through. It wasn't quite literally. I had just finished editing and I was uploading it and I was like, okay, I have to put the company I referenced in my closing on it. And I was looking at the thing and I saw XCI there. I'm like, wait a minute. I already did this video, And it was like, but what could I do? It was like, I had 2 choices. I had a brand new video and I did a better job, I think, on the second one because I also dug into more paper and more stuff. So I was like, I got 2 choices. I can just, say, sorry guys, no video. There was a technical issue. Well, I wouldn't have said technical. I would have basically said, because I messed up. I could have done that, or I could have just released it. And I'm like, let's just release it. At least it gives people something it's a little bit different. So I did. But I do want to do XDIV. I do. Actually, I think the other one that I wanted to do as well, was it PDIV? I think I want to do as well. But yeah, we will. It's just one of these things. Like, I wish I could just do every single one. I want to do them all. I really do. But we'll have to see. Let's see. Ian says, bought back EIT in my TFSA, up 10% plus dividends, bought January 2nd. Nice. Kraken Robotics is cyclical, I believe. I almost bought at 50 cents. Vector Vest is calling for 169. Well, that's interesting. Well, it really depends. Like, I don't know. Like, this is the thing. This is the one thing that holds me back from Kraken Robotics this moment, is I don't know the demand for underwater robotics at this moment. So I would want to do, like, what I would do is I would do research on underwater robotics. I would see sort of where they're positioned in that market, what that market is supposed to do. That to me would be really, really cool. Let's see. If Div holds its price, I will be in the green after the next dividend. Oh, cool. All right. What? I'm not sure. Let's see. Kawashin says, maybe not cyclical, but COVID was tough on them, which would make sense. Yeah, absolutely. Bismarcky, put up a poll where all 4 options are XDIV. There we go. Then we'd have to see which one wins. Yeah, do a poll. XDIV, 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 XDIV. Yeah. Wow, that's hilarious. I know I should be buying growth stocks, but I like dividends because I can see what I am going to get, even though I know they can cut dividends and lose value. Well, you see, that's where, you get a half decent total return stock. You can get some, moderate dividends plus all that growth. So you're still getting something. Just a thought. But I mean, it really, It depends. Some people just love that positive feedback of seeing the bigger numbers come in, and there's nothing wrong with that. Um, there's more than one way to invest. That's for sure. A video on XDIV would be great. I'll get it into the next vote. I will put XDIV up next. So the next ETF one, so the September ETF, I will put it in there. And all you guys right now who are going XDIV, you gotta vote for it. You gotta vote for it. That makes it easy. Then I don't have to find a way to squeeze it in. And I'm even gonna take my little pen here, and I'm gonna make sure I can write on the back of this. I can. All right. So SEPT XDIV, and then I will transfer it to the computer here in a bit. All right, we will do it. We will do it. Michael says, GOF pays 18 dividend every month, and watching and thinking could dip back to $14.80 to $15, which has been climbing all year. GOF. Let's take a look at GOF. Here we go. So Guggenheim Strategic Opportunities Fund of Beneficial Interest. Well, that, I wouldn't want to have to say their name 3 times really fast. That would be a little bit difficult, Let's take a look here. All right, so they had, and once again, this is that time where we know we have a bear market in there. So, that downward slope is kind of normal. I'm mostly interested to see if they're recovering. In this case here, we are seeing some recovery since about here. So yeah, since right here, October of 2023, they've been doing a lot better. So we got a little bit of recovery going on. Whoops. Let's pull this over here. I don't see an EPS, but they're a fund, right? So that's probably why. That makes sense. What do they got for a dividend here? Not bad. 14.153% monthly, 18.2 USD. So they got a nice looking dividend. Gotta go over here to 10 years and take a look. So we can kind of see that they kind of have, like before this, you can sort of see probably, I would say even in around here would be their mean, somewhere around $18. So I could definitely see them getting back there eventually. I would want to, of course, look into a little bit more of their fundamentals, but I can see them getting back there. And that's, and they're a fund. So normally a lot of these funds, they're not really designed for a lot of growth. They're designed to give you income. And that's exactly what this one is definitely doing. All right. Let's see. I feel like I have a hard time finding a home run at the moment, although I'm up 20% this year. Well, that's a home run right there. Sometimes you don't. Here's the thing. You don't have to have a Wayne Gretzky on the team to win the Stanley Cup. You can have a team that has everybody pulling their weight, and you can outperform that one team that has that one star player on it. So you don't have to have Wayne Gretzky. You can do it without him. Could that have been the more Canadian analogy than anything? Really? Al says, I think I'm over 40%. Ooh, that's even better. How I vector vest. I'm not sure exactly what you're asking. I think I know, but I'm not 100% sure. I'll leave it for now. Maybe not. I really don't know. Let's see. I love reinvesting dividends after a few years. I also get gains in share value. I'm up 17% on EXE plus dividends, bought February 2023. EXE, one of the other ones on Tuesday's video. That's not too shabby. All right. We're going to head over here to George. Hello, George. Do you have a Bitcoin position? I've been buying on large dips and selling for profits constantly during this long consolidation period. So yes, I have a Bitcoin position. Two things with Bitcoin. So with Bitcoin, I have them in the 0 to 100K challenge. So right now I'm holding BTCY, but it is it's a covered call Bitcoin fund. So that means if we do get this explosion that a lot of people think are coming, and Bitcoin goes parabolic or whatever, however it goes, I will lose some upside potential on that. So I'm at the point that I'm looking to change that up a little bit. So I'm probably going to move into a just a regular spot Bitcoin ETF. So that way there, if that happens, I can ride that up without too much of an issue. Right now, I am up a good amount on BTCY. I think I'm up. Actually, let me take a look. Boop-a-doo-doo-doo. All right. Right now I'm up about 16%. So I'm up a little over 16% on BTCY. So I have no qualms getting out at that amount and moving over to a spot Bitcoin ETF. So I might actually do that before the next 0 to 100K. So I'll update that in that challenge if I make that move. But that's kind of the thing. I expected, and this is kind of the reason, because a lot of times, one of the reasons I went with the BTCY early in the challenge is I was expecting a lot of volatility and movement, a lot of sideways movement, pretty much for at least roughly 5 months after the halvening. So that one made sense. At least take advantage of that. You got the dividend coming in, adding to your return. But now it's at that time where I'm getting close. We're getting closer to some serious Bitcoin movement. And as a result, I'm like, okay, I don't want to be having that upward potential capped. So I'm going to change that over. Now, I mentioned that was part of it. Now, addition to that, I also do a lot of swing trading with Bitcoin as well using ETFs. So, that's also just something I do as well. Just something to keep in mind. Let's see. Al says I only started this year in February. I don't know what percent I'm up because I add cash to my accounts every week or so. Chart looks good, but like I said, I add money often. Okay, fair enough. Let's see. I haven't either for quite a while. I bought a few Gretzky's and have stuck with them. There we go. Let's see. Haven't restructured for quite some time. And then I tried to restructure with AVGO in June. I lost 20K and said, forget that. Oh, gosh, that's a lot to lose. And just went back to NVIDIA and was all dumb on my part. All right. It's not really restructuring, but I was trying to change gears. There we go. CLW sells paper products like we offer a complete selection of bath tissue, facial tissue, paper towels, and napkins with quality tiers from economy to ultra premium. Well, there's always going to be a need. And heck, if we ever have another pandemic, they'll sell all their paper, their toilet paper for sure. Hopefully not. Hopefully this Mpox thing just goes away. But you never know. How is vector investing overall price and results? Honestly, I don't really do vector vesting. So to give you a fair answer, Mario, I need to do some research into that. Because right now, too much speculation on my side, and I don't want to do that to you. So let me take that away. I'm going to write it down. Ask me next week about vector vesting because I will do some research. All right, there we go. I mean, I've heard of it for sure, but I don't think I have enough. I don't have enough knowledge on it to give you a good answer at this point, but I will next week. Let's see, up 13% in 1 year in my non-registered account to Wealth Simple chart. Not too shabby. And Michael says, I love buying the dips in companies that has a dip like CLW, which up the last 2 days of last week, which book value of $39. Yeah, and that's the thing. I mean, if you have full confidence in a company and you get a dip situation, that's the time to get in. That's definitely the time. And Kawachin says, I find vector vesting good for finding momentum, but cycles change. And that's fair enough as well. So yeah, it's kind of, see, for me, most of my fundamentals are fundamental investing. So I'm basically a fundamentalist. Oh God, that sounds horrible. I'm a fundamental investor, using I use a little bit of TA when it comes to trading, but not as much when it comes to longer term holds. So just something to keep in mind. Okay, guys, I think we're almost at 3 hours. I think that's probably long enough this time around. We'll be back here, of course, on Wednesday. We got the market close, and we'll be back here again to do this all over again next week. And don't forget as well, Thursday night, we have the exclusive channel member live stream. So I don't know yet what you guys are going to have me talking about, but those have been really rocking the last few months. Holy banana bread, they've been good. So looking forward to that. Until then, everybody, and oh, I can't say that yet. I have to get rid of that. All right. Until then, everybody, this has been another fantastic stream. I will see you guys again pretty darn soon. And look forward to that video coming out on Tuesday because it is going to be a, what's the word? Oh, it's going to be a good one. There we go. All right. Take care, everybody.